Yeah,
So,
please go ahead.
one more time. Yeah, we are live, sir.
Okay, thank you. Thank you so much. Should I see the YouTube link also for any doubts as such? Let me just open that.
Rahul, you need to unmute yourself.
Yeah. Hello. Am I audible? Right. So we will let you know the YouTube questions at the end of the session.
It's already okay. Cool, no problem. And I opened it now.
Yeah.
Thank you.
Shall I start, sir?
Yes, please.
Good morning to everyone. I welcome everyone for recall and revision marathon session of CA Inter Paper 2, Corporate and Other Laws. I am Rahul H. today, a volunteer of today's session. I am also a CA Inter student. I am really happy to host this session. So we have CA Punarvas Jayakumar sir. We are really delighted to have him as our faculty for today's session. We welcome you, sir.
Thank you
for today's session.
Thank you.
We also welcome all the students today for this session of a CA Inter Recall and Revision Marathon session. So, a small info about sir. Sir is also a consultant in a corporate and economic laws. He is a co-founder and director of Advait Learning Private Limited. He has cleared his CA intermediate course in 2012 in his very first attempt. He has worked on several large clients like Infosys, MetLife, ING, etc. He is a co-founder of ThinkFin Solutions LLP, a consultancy firm with a group of chartered accountants, company secretaries, lawyers specializing in corporate tax, insolvency, audit and tax, valuation and certification, risk advisory, fraud analysis, investment and wealth management, co-business advisory, global mobility services. He is also a faculty at Bangalore branch, Ernakulam branch and Mangalore branch of Institute of Chartered Accountancy of India for law, auditing and taxation at all levels of chartered accountancy. He has taught over 40,000 CA students. We once again welcome you, sir.
Thank you so much, Mr. Rahul. Thanks a lot.
Would like to give a small information to the students, sir, that students will be welcome to post their queries in a YouTube comment section. We will get back to you at the end of the session. Thank you.
Cool. Thank you so much.
You guys.
So can we begin?
Yes, sir. Sure.
Okay, thanks. All right, guys. Happy morning. How are you doing? Nervous Jayakumar here. So let's begin, guys. We just have a 3-hour plus 3-hour, 6-hour session. So whatever is possible is what we are going to do now. So we will cover as much as possible. That's what we are trying to do. So in this session, what we are going to try is just clearly a quick revision of the entire syllabus as much as possible. See, we have 6 hours and we have, a hell of a lot of syllabus to cover. But the thing is, this is just a revision session. So in a revision session, obviously, you just need to do the important areas and just a very, very quick revision. So those of you who have never studied before, obviously, this session is not for you. It is only for the ones who have studied everything, who are writing their exam in the upcoming examinations. Just a quick revision. So what I have done is I have a chart book, which is a colored chart book, which is a published book. So I've taken extracts from that, and from that we'll be doing. So basically, it's around here both put together for company law, it's around 70 sheets. So what I was thinking, because see, company law will come for almost 60-65 marks, and the remaining 35-40 marks will come in the other law. So I hope you know how the questions will come. It would obviously be corporate law and then company law, that is, and then your other things. Then your Indian Contract Act will come for around 10 to 15 marks. Negotiable Instruments Act will come for around 7 to 8 marks. Then we have your General Clauses Act and interpretation of statutes. These also would take up the remaining thing. Now, we cannot do everything. So let's just at least finish company law portion as much as possible, because it comes with a major chunk. Okay. And let's see how we can cover the other things. So again, I repeat, guys, it's just a quick revision. It's as the name itself suggests, it's revise and recall. So very, very quickly, we will try to analyze. So today we will try to finish. There are 70 sheets here, right? So today we will try to finish around 35, so that tomorrow we can finish 35. Because I believe that rather than just picking up certain things and doing, it's better to do something in everything, so that you will understand the concept. So if you see the what do you say, syllabus, so to speak. So we have quite a lot of syllabus in Companies Act, my dear friends, as you know. So we have preliminary, then incorporation of company, prospectus, share capital, acceptance of deposits, registration of charges, management and administration, declaration of dividend, audit of company. So this second, till here at least. So our syllabus will comprise till here, audit and auditors. After this, what happens is your your other things start. That is, your other things means your CA final syllabus will start. Now in this, my dear friends, this chapter number 8, 9, 10, that is, I hope you know that payment of dividend, accounts of companies, and audit and auditors will be there for both CA, inter only, either it will come in law and it's also there in auditing. So these three chapters are important for law also and for auditing also. And these chapters, that is from chapter 7 onward, 7, 8, 9, 10 are extremely important for our law syllabus as well as auditing. It goes without saying. But yeah, chapter 7 will not come in auditing, but 8, 9, 10 definitely will come in audit. So apart from that, you have your preliminary, incorporation and share capital chapter, deposits. So deposits and charges, one question will come. Share capital is also again an important chapter. And of course, the preliminary quickly are all important. So basically everything is important, but I'm saying if you see weightage wise, generally share capital and debentures slightly more will come. And of course, from chapter 7, 8, 9, 10 are extremely crucial and extremely important. So let's just quickly do the preliminary and incorporation very, very quickly, and then move on to other areas. Okay, fine. So let's begin, my dear friends. So let me directly dive into the charts. So as I told you, since a quick revise and recall session, we need to see what best we can do. Okay. Yes. So first one, section 3, formation of the company. I think the screen is visible to all of you, I hope. Yeah. So let's see. Section number 3, that is what? Formation of a company. So we know we have company limited by shares, limited by guarantee, and we also have an unlimited liability company. Now these things you already would have studied where? In CA foundation. In foundation, you have studied all these things. So it's just going to be a quick revision of all those areas. So we know for a public company, we need minimum 7. So just blindly listen, guys. One day before the exam also, this video, just listen to it at 1.5x or 1.75x. It will help you, because it's going to be a thorough, very, very quick revision of what, I feel are, important areas. So minimum number of members for a public company 7, for a private company it is 2, and OPC for 1-person company obviously it is 1. By subscribing their names to the something called as the Memorandum of Association. So if you think about it, if the company is at the center, company is managed by excuse me, company is managed by two different sets of people. Managed by who? One, it is managed by shareholders, and it is also managed by board of directors. So it's a 2-tier management system, my dear friends. One, it is managed by whom? Shareholders. Other one, it is managed by board of directors. It's always a 2-tier management system. That's what we would like to believe. Right, one second. So as we can see, one second, hold on. Okay, cool, good to go. So it's a 2-tier management system is what I'm trying to tell you. Seeing if everything is on track. Yeah, good. So basically now what I was trying to tell is there are certain things that the board can do and certain things that the shareholders can do. And whenever the shareholders want to decide something, they will do via a meeting. And this meeting is called as a general meeting. This also is very much part of your syllabus. And what is a general meeting? You have annual general meeting and extraordinary general meeting, AGM and EGM. Whereas for the board of directors, you have something called as the board meetings. The entire board of directors powers and their meetings, etc., would be covered to you in CA final. Whereas in CA Inter, you have all these things. That is, what are the shareholders' powers? And of course, before the company comes into existence, that you have to incorporate the company. So that's why we start with the concept of incorporation. And who would incorporate the company? Obviously, people called promoters. The same thing you studied in foundation, the same thing is here also. It will be incorporated by somebody called as the promoters. And after promoters, what will they do? They'll subscribe for shares. So share capital is the next chapter. So I'm just giving you a logical, sequential thing of your entire syllabus, right? And of course, you need to issue shares. So share capital chapter is there. And how will you manage the entire show? That's why you have management and administration chapter. Anyway, coming back, guys. So we have public company 7 members, private company 2 members, OPC 1 member. And what does it say? It will all go to the Memorandum of Association. It will be subscribed. So MOA is the charter of the company. It is one of the most important documents in the company, MOA and AOA, as you know. So MOA indicates the name of the, in OPC MOA, there is one more extra thing, and that extra thing is what? You also have to have a nomination clause. So what are the various clauses of MOA? You have name clause, where the name of the company is given, registered office clause, then you have the objects clause. In the objects clause, main objects of the company will be given. Then you have the liability clause, company limited by shares, company limited by guarantee, whatever the case may be. And of course, after that, you have the association clause. Association clause is next, capital clause and subscription or association clause. In a capital clause, you will have authorized capital, that is the number of amount of share capital divided into face value. So you'll have the face value and the amount of share capital. Whereas in the association clause, you will say that we, the several persons, have come together. So the beauty about the company is everything is an association of person. A HUF is an association of person. A partnership firm is an association of person. Everything is an association of person. But in a company, that is also an association of person, but that is incorporated. Incorporated means it is registered. Where it is registered? It is registered with the registrar of companies, a person called ROC. All right. So if you see subscription clause, you have private and public company. So again, who will sign the memorandum? 2 subscribers will sign, and for public, 7 subscribers will sign. On the other hand, for a 1-person company, a person who will become member of the company will be signing. Apart from that, guys, as I told you, one extra clause is there, and that clause will be the nominee clause for OPC. Like, for example, if 1 person dies, see, generally the company derives from the concept of perpetual succession. Members may come, members may go, but company will go on forever. We know that. So there is something called perpetual succession that you know. But in a 1-person company, there cannot be any perpetual succession. In a 1-person company, it's weird. There will not be any perpetual succession. So to ensure that perpetual succession is there, what they have done is they have also inserted something called as a nomination clause. So where 1 person has to come there in event of your death. That's it. So that will be filed with the ROC, and that person has to give his consent saying that, yes, in case this person dies, I will take over the company. He has to say that. That is what it is. So a little bit more about the OPC later. There have been a couple of amendments. So we will check that in a while. So yeah, the intimation should be made. All that is fine. So that is done. Now, a couple of other things. Can you alter the clauses? Can you alter the clauses? Of course, you can alter the MOA and AOA. For alteration of MOA and AOA, generally, for all alteration of MOA, you need a special resolution. For all alteration of MOA, you will need a special resolution. So special resolution, so basically, if you want to talk about resolutions as such, resolutions are of 3 types. One is ordinary resolution, one is special resolution, one is unanimous resolution. Unanimous means what? Full 100%. Everybody will agree. Ordinary resolution means what? The votes cast in favor is more than the votes cast against. Means more than 50% of the votes. And special resolution, my dear friends, is at least 3/4. Mind you, here it is more than 50%. Here it is at least 3/4. or simply put 75%. Greater than or equal to 75% is there in this particular thing. Whereas in unanimous resolution is what? Unanimous. Uni is single, animus is mind. So unanimous means what? Every person in the company who's attending that meeting should vote on the resolution. So basically shareholders resolution will be there. Special resolution obviously means what, guys? 75% majority. So that's what it is. So basically every alteration of MOA always requires what resolution? Special resolution. Every alteration of MOA always requires special resolution. There are two types of clauses. One is called as the capital clause and liability clause. We know that. So basically you have the name clause, situation clause, objects clause, liability clause, and capital clause and association clause. So these are the clauses that we have in the particular scheme of things. Okay, so anyway, as I told you, for alteration of MOA, what resolution is needed as per the law? Special resolution, because more number of people should agree to change the MOA. However, for capital clause, my dear friend, is an exception. Mind you, for capital clause is an exception. You can change the capital only by passing a what? Ordinary resolution. An ordinary resolution is enough to change the capital clause. As far as liability clause is concerned, for alteration of liability clause, again, we have to pass a special resolution. Always remember, my dear friends, whenever we pass a special resolution, one extra file should be, one extra form should be filed always. It is called MGT 14. Whenever we pass a special resolution, MGT 14 has to be filed. So keep that in mind. MGT 14 has to be filed. Keep that in mind. So we have a capital clause, we have a liability clause, special resolution has to be passed. For capital clause, mind you, ordinary resolution has to be passed. So what is the exception to the rule of alteration of MOA? Yes, we have it in the capital clause. Capital clause we have, which says in a capital clause, what should you do? Ordinary resolution is enough. So that is the next part of the story. So what do you mean by alteration of capital? What are the examples of alteration of capital? Very simple. I can increase my authorized share capital. I can consolidate or divide the shares into shares of, higher value or shares of lower value. For example, I can subdivide also. For instance, I can make 10,000 shares of 100 each. I can convert it to 1 lakh shares of 10 each. I can also convert it to 10 lakh shares of 1 each, whatever it is. I can do this, no problem. I can do 10 lakh shares of 1 each, 1 lakh shares of 10 each, 10,000 shares of 100 each, whatever it is. You can do all these things. Subdividing the shares also, where the proportion remains the same, I can do that. I can convert fully paid up shares into stock. Consolidate means, of course, consolidation is what? Where or divide the shares. I can divide the shares, 10,000 shares into 1 lakh shares I can do. Or I can further say, if I had, let's say, 50,000 shares of 10 each, I can make it what? 5,000 shares of 100 each. All that I can play around here. Consolidate or divide, subdivide the shares. Or I can increase the authorized capital. Authorized capital will be the most important, the first type of capital in the company. Beyond that, you cannot go unless you change the Memorandum of Association. Or you can do what? You can cancel the shares also. Second, one more thing. Convert fully paid up shares into stock. What do you mean by that? Fully paid up shares into stock. The stock is a collection of shares, my dear friends. Can I sell shares in fractions? No, I cannot sell 0.1% of the share. I cannot sell 0.5% of the share, not possible. But in this particular thing, what do you say? In stock, I can convert the shares into shares of some value. So definitely I can convert the shares there. So in that case, the entire shares will be converted to stock. Stock is a collection of shares creating one fund value. Now I can transfer 0.1% of the share, 1% of the stock, 2% of the stock, 0.005% of the stock, I can do that. Again, for that, different procedure is there that you leave it now. Got it? And then lastly, cancellation of shares. Cancellation of shares means what? It is not the same as reduction of capital. Slightly later, we will see. In the share capital chapter, we'll see that. Then these three doctrines you had in CA Foundation. So I'm not going to again go deep into it, but just the gist of the story we will tell. Doctrine of ultra vires. Doctrine of ultra vires means what? Beyond the powers of anything. So it is always to protect the company and the shareholders always. It's called doctrine of ultra vires. Can you go against the articles? Can you go against the MOA? Is what ultra vires talks about. So basically, there was one case law that you have to remember: Ashbury Railway Carriage Company and Iron Company, whereby in this case, where the doctrine of ultra vires had happened, it was not mentioned in the MOA. So ultimately, they said that the outsiders will be liable. So in this particular case, outsiders will be liable. It will always protect the shareholders and creditors. Slowly, this rule was overturned by one more rule called, doctrine of constructive notice. Doctrine of constructive notice is one more thing that came. Third one is doctrine of indoor management. Constructive notice means what? Very simple. When the MOA and AOA are filed with the ROC, they become public documents. You cannot touch those documents. You can view those documents. It becomes public property. You can view those documents. If you did not read the documents properly and then entered into a contract with the company, then can you cancel the contract? No. For example, the company was into buying and selling of fruits. Just an example. The company was into buying and selling of fruits. That's it. That was there in the objects clause of the MOA. You entered into a partnership with that company for buying and selling of fruits. Now, whatever the transaction that you had, you entered into a contract with the company for buying and selling of fruits. Whatever contract that you entered into with them, is it valid or void? It is definitely void, because buying and selling of fruits was there in the objects clause. But entering into a partnership with that company, that was not there in the objects clause. Guys, in an objects clause, everything must be there. The main objects and the ancillary objects. Ancillary means what? Everything that will help you protect the main objects. Everything and anything that will help you protect the main object. That is the ancillary clause also must be there. So in this particular thing, not only the main, but also the ancillary clause is also important. What will be the ancillary clause here? Entering into a partnership with somebody. Entering into a partnership with somebody to, enter into a partnership with this company to buy and sell fruits. So even that partnership word must be mentioned in the objects clause. Otherwise, object clause will not hold good. Okay, like that. That is called constructive notice. And here, there are certain rules which if the act is ultra vires the directors, then shareholders can ratify it. Basically, if the whatever actions that you do, act here means actions. Whatever actions that the directors do, if it is ultra vires the directors, in the sense they do not have the power, but then the AOA can grant the power later, or basically the shareholders can ratify that particular thing. Whatever you did is ultra vires the articles of association, company can alter the AOA, we know. But if you do something which is ultra vires the memorandum of association, like we did now, entering into a partnership with somebody, though it is not mentioned in the MOA itself, can the act be ratified? Ratified means what? Can it be approved? No. Basically, the future transactions can be changed by altering the MOA, but that particular action that you did cannot be ratified. That particular action that you did cannot be ratified. That's what they're trying to tell. Then, alteration of memorandum of association. As I told you, we have the name clause. Name clause, you can change it two types. One is voluntary change and one is compulsory change. What is voluntary change? I want to change the name of my company. So will I also have to follow this procedure if I'm changing from a private company to public company? No, that procedure is different. Here, it is purely what? Of course, when I follow the procedure of conversion of private to public, automatically this also will be followed. But let's say I'm a public company and I want to change the name. So in that case, obviously, I need to follow this procedure, voluntary change of name. So many companies have changed their names, guys. Your Just Dial Limited was something else before. Your Veranda Limited was something else before. So basically, people change the names a lot. They keep on changing the names, no problem. But if you want to convert from private to public company, you have to follow a separate procedure, and in that procedure this is also included, where the change of name, as you know, in private company, private limited will be written, in public company, limited will be written, right? We know that. And what's a private company? A private company is a company which has these elements, that is RS, LM, PI. Restrict the right to transfer the shares, limit the number of members to 200, and prohibits what? Invitation to the general public to subscribe to the securities. So these are all the various things we have in this, private company definition. Public company is anything other than private company. Life should be so simple as public company definition. Public company is what? Other than private company. So easy. Anyway, come back. So as we see here, guys, we have the name clause, we have the other clauses. Name clause. So here, name of the company can be altered by passing what resolution? By passing a special resolution. As always, remember, any item in the MOA can be changed with a special resolution. Exception is your capital clause. For capital clause, what resolution is needed? Ordinary resolution. And of course, association clause cannot be changed. How can you change association clause? That cannot be changed. Basically, like 4 people coming together and starting a company. Can you change that? No, that cannot be changed. Because if 5 people have come and started the company already, tomorrow you cannot say that you did not start the company. So association clause cannot be altered later. Got it? Moving on. So the name of the company, as you can see, can be altered by passing a special resolution, and central government approval is also needed in INC 24. Yes, as I told you, it is not required for addition of the private company word. If you are converting from private to public, etc., just for that addition of that private company or deletion of that private company, if I'm converting from private to public, I do not need to follow all this entire procedure. And mind you, you cannot change your name if you have not filed what? Annual return. If you have not filed the financial statement. So financial statement should be filed under 137 in form number AOC4. Annual return should be filed under section 92 in MGT 7. And if you have not repaid the deposits and debentures, etc., then you should do that. And once the name is changed, the registrar will issue a fresh incorporation certificate in INC 25. Very, very simple. Moving on, if I am changing the identity of the entire person, that is, this is of the company, that is compulsory change. When will this happen? Compulsory change will happen when you have copied some other company's name, or it is similar sounding to somebody, some other company. Can I start a company called Infosys? Think about it. No. Can I start a company called Wipro? No. Can I start a company called Tata? No. All these things are similar sounding to established companies. So let us presume that you, by mistake, you have already registered the company. Now Tata, Infosys, and Wipro can come to the ROC and says, bro, how come you allowed this company to be registered? I will hereby, I am ordering you to change. I'm ordering you to change. So if you see there, check it out. Change of identity, compulsory. So in this case, guys, if you see in the name of the company, it's changed by special resolution. But here, when the government is ordering you to change because of a complaint lodged by a registered trademark holder, there is no concept of special resolution. There's an exception again. When compulsory change of name, what resolution is needed? Ordinary resolution, not special, but ordinary resolution. Then I have to intimate the ROC. So when should I do it? Within 3 months. I should do it within 3 months period. So earlier it was 6 months and all that. Now it is 3 months. That is important to remember. That's about it. Yes. So basically that is what we have to check. Then apart from that, I cannot use the identical names of whatever is already there. It should not be identical in any sort of a thing. It should not consider an offense in any other law. I cannot use Prime Minister's name, President name. I cannot use, though I'm not a government company, I cannot say Central Government Limited, local authority. I cannot use all these things. I cannot say board, commission, authority. I cannot say that, what do you say? PJ Republic Limited, PJ Democratic Republic Limited. No. PJ Central PJ Limited. No, I cannot use these words, center, board, commission, etc. without, what do you say, taking the approval or without having that particular format, which means if I am a company which is a political party and I'm a company which is running the political party, so that political trust, let's say, without the permission, without following the rules and regulations, I cannot blindly change my name or write my name anywhere. What is the procedure for name change? There is a form called INC1. You should file it, and based on that, the name will be reserved. The name will be reserved, and for a period of 60 days, the name will be reserved, and within that, you have to follow the entire procedure. And if you don't follow the entire procedure, or if you have used up somebody else's name already, the entire reservation of name will be cancelled, and there will be a 1 lakh penalty. 1 lakh penalty, and it can also result in striking of the name of the company if you commit fraud. As far as the Memorandum of Association is concerned, we have these tables. See, MOA is always there in schedule. You know, there are around 470 plus sections in the Companies Act and various schedules. What does the schedule do? Schedule provides a format. A schedule provides a format for the entire section. So schedules here we have, schedule number 1, which speaks about the format of MOA and AOA. And for the Memorandum of Association and Articles of Association, I mean for this MOA especially, we have table A, B, C, D, E. A, B, C, D, E. So A is company limited by shares, then you have limited by guarantee, then having share capital, without share capital, all these things. But anyway, for our purposes, only table A, if we follow, it's fine. Similarly, what is the structure for Articles of Association? We have from EF onwards, F, G, H, I, J. These are the things. Again, in that case, company limited by shares only we need to see. So table number F would be relevant for us. Now, moving on, my dear friends, it's all a quick, thorough revision, as you can see. So if we can finish at least 10 sheets per hour, there are 35 sheets, 3 hours we have today. So if we finish this 35 sheets, we'll be in a good position. Tomorrow we can finish the remaining 35. At least the company law portion, just have 60, 70 marks will be covered. That is good enough, because I think the other laws you can do on your own. There's nothing much to do in Contract Act. Very easy it is, negotiable also. So this part is what is important, because company law comes for the bulk of the area. Okay, mind you, it's just a revise and recall situation, revise and recall scenario. So quick revision of everything. Nothing can be done in depth, guys. It's just 6 hours that we have. I hope you understand that. But it will, if you have studied really well, this will be a thorough revision. It will really help you in the examination for sure. So I should thank the SIRC for, of course, giving the opportunity to me as well, and also for having this nice session. So it will definitely help you guys. Yes. So alteration of registered clause now. Office clause. Can I change the office? Of course, yes. So guys, office can be, even MCQ will be, they can ask you MCQs also in these areas. Very, very simple. So in MCQ, always remember, guys, first kindly read the questions. Read the questions to understand what type of questions they would have asked, and then you go to the paragraph. And there will be an entire paragraph of questions. So first kindly read the 1, 2, 3, 4, whatever questions they have given, and then only read the paragraph. Don't go by the traditional method of reading the passage and then reading the questions. Please read the questions first and then go to the passage. It will be easy only, nothing to worry. Okay. Yeah. So alteration of registered office clause, one by one, same city, one place to the other place, same city. So if I want to change from, let us say, Nungambakam in Chennai, if I want to change to Anna Nagar in Chennai, if I want to change from Malleshwaram in Bangalore to Jayanagar in Bangalore. So yes, same city, one place to another, only board resolution is required. Only board resolution. And then I have to intimate the ROC in a form called INC 22 within 30 days of such change. But if I'm changing from one city to another city, I am changing from Chennai to Coimbatore. Chennai to Coimbatore is a bad example because I'll see that later. Let's say I'm changing from Bangalore to a place called Mysore. Correct? Basically, one city to another city. In that case, I would need a special resolution. Why Chennai to Coimbatore is a bad example, I'll tell you. So for this example, Bangalore to Mysore. Okay. So a special resolution has to be passed, and what? It has to be approved, where obviously in the general meeting. And as I told you, my dear friends, whenever you pass a special resolution, MGT 14 is mandatory. And of course, for all registered office forms, it is called INC 22. Within 30 days of such change, you have to do. Third one. Now I am shifting from one ROC to another ROC within the same state, but between two cities. This is an example of Chennai to Coimbatore, because in Chennai you have an ROC, in Coimbatore you have a different ROC. In Karnataka you have only one ROC controlling everybody, but in Tamil Nadu there are two ROCs. One person sits in Chennai, one person sits in Coimbatore. So basically from one ROC to another ROC, if it is shifting, one ROC to another ROC, if it is shifting, then this concept will come. In this case, my dear friends, board resolution is there. And again, if you see, special resolution is needed. Special resolution is needed. MGT 14 within 30 days. MGT 14 within 30 days. But the best part of the story is what? If I shift from one state to another state. So these two are very easy. That is, if I'm shifting from Nungambakam to Annanagar, board resolution. If I'm shifting from Bangalore to Mysore, special resolution. But if I'm shifting from Chennai to Coimbatore, ROC will change, right? So by merely passing a board resolution or special resolution, it's not enough. You have to do something more. What more you have to do? Check it out. You have to give a declaration. Who has to give a declaration? A key managerial person and two directors have to give a declaration saying that there is no default in the company. I have not committed any default. And an NOC by creditors. NOC means what? No objection certificate by creditors. They should say that, boss, look, I have no objections if the company is shifting from Chennai to Coimbatore. And also, they will also say that tomorrow I will not come and seek jurisdiction. I'm very, very happy with where I am. You please go ahead with the change. Then I will also, with this declaration, this KMP and two directors will give this declaration with the NOC and all those things. And the KMP will also say that we will also, the prosecution is pending. We will come back to this place and handle all the cases. Don't worry. We are shifting for purely business reasons. All that you should give. KMP means key managerial personnel, MD, CEO, CFO, etc. and two directors. Then guys, there will be an IAS officer, chief secretary. I should intimate the chief secretary, will acknowledge it, and then proposed shifting will happen. And obviously all the documents should be attached in a form called INC 23. And it is filed with whom? The RD. RD here means regional director. Within 15 days, the regional director will pass an order. They will accept it or reject it. Once the confirmation is received, I will send it to both the ROCs. One ROC is ROC Chennai. One more ROC, ROC Coimbatore. So ROC Chennai also will forward to the other ROC within 30 days. And the new ROC, if I'm shifting from Chennai to Coimbatore, the new ROC will register the same. Very, very simple. So this is a very, very simple procedure. This is for what? Shifting from Chennai to Coimbatore. What if I shift my office from one state to another state? What if I shift my office from Bangalore to Chennai? From Karnataka to Tamil Nadu, what will happen? So that this part is there. So here, my dear friends, you have to pass a board resolution and a special resolution. Board resolution and special resolution is needed. MGT 14, same procedure, no change. Apart from that, some additional documents are required. Apart from that, we need some additional documents. What are those additional documents? We have to file a copy of the MOA and AOA, Memorandum of Association and Articles of Association, minutes of the meeting of that entire meeting that happened where I'm proposing to change, both the board meeting as well as general meeting. And if any power of attorney is needed, where the work of the company is taken over by somebody else, like company secretary, etc., so that power of attorney is needed. Then list of all the creditors, list of all the debenture holders must be given. Of course, I should take a no objection certificate from them also. Then there will be a declaration. In the previous one, it is KMP and 2 directors. Here it is company secretary and a managing director and 1 director, basically 2 directors. They should give a declaration saying what? A full enquiry is made into all the liabilities that the companies have. Proper estimates we have made of all the debts. For all the debts involved, we have made proper estimates. And then no other debts are there other than the ones which have already been declared. Basically, they are trying to tell, look, we are not shifting from Bangalore to Chennai to escape from our liability, to run away from the creditors. We are not doing that. We are doing it purely for a business opportunity that has come up, which is very, very good. Again, it will be given to the chief secretary. Application will be made to central government in INC 23, minimum 30 days. Before that entire thing, we should also give a newspaper advertisement. So before all this is happening, we should also give a newspaper advertisement saying that in vernacular language and in English newspaper, with saying that, look, I am giving a notice to everybody. To whom? To debenture holders and creditors. So one is newspaper advertisement. Second, I should also give individual notices to all the debenture holders and the creditors. And also I'll have to give notice to whom? The Register of Companies, SEBI. If the company is listed, I will give it to SEBI also, and any regulatory authority. For example, if it's an insurance company, I will give it to IRDA, Insurance Regulatory Development Authority. Inviting objections from them, correct? They will have to give an objection right now. If there are objections for other people, what about shareholders? If there are objections from shareholders, then there will be a hearing. Everyone will get an opportunity of being heard. So there will be a hearing. If there is any consensus in the hearing, good. If there is no consensus, they do not agree, then again there will be an affidavit. Affidavit is a sworn statement saying that do not worry, all the issues will be resolved. Like that, they will pass. On the other hand, if everything is done, what will happen? Final order will be passed for the change, and you will change the office. And I will file this order with both ROC of State 1 and ROC of State 2, both. And that form is INC 28. That will be what? INC 28. So this is the entire procedure. Application should be made to the central government. The central government here, the powers are shifted to regional director. Basically, regional director will handle all these things, and he will give the approval and give both the letters to whom? One letter to the ROC of one state, ROC of Karnataka. One more to ROC of Tamil Nadu. He will give, and he will close the issue. This is what, guys? Shifting of office from one state to another state. All these things can come in the exam, 2 marks, 3 marks, 4 marks questions, very much so. Moving on now. Articles of Association. Yes, Articles of Association, we have AOA provisions, and the format, as I told you, is there in F, G, H, I, J. These are the entire formats of the Articles of Association. What will override what? Will the Act override the MOA, or the MOA AOA will override the Act? Is an important question that generally people ask, or generally which is there. Who will override who? So very interesting to know that Act always overrides the MOA or AOA. It is Act which always overrides the MOA or AOA. But guys, sometimes, for example, the Act can give power to the AOA and MOA to sort of go against the Act itself, to go against the provisions. When I say against the provisions, for example, quorum. So quorum, there's a list. For public, private company, 2 people must be there. For public company, there is that 5, 15, all those things are there that you leave. But the quorum section 103 has one line which says articles can have a larger quorum. It says articles can have a larger quorum. So it can say that articles can have a larger quorum. If that be the case, what I'm trying to tell is the articles here, AOA and MOA, can it say that I want, instead of 2 quorum is the minimum number of people in a meeting. Can the article say, I don't want 2, I want 20? Yes. Minimum number, can they increase it to 20? Yes. This can be done by whom? It can be done by the Act itself. Act gives the power to the AOA and MOA to sort of go against the provisions of the Act. When I say against the provisions, it's all for good. No, nothing against the company, nothing against the entire legality of the Act, but that's what. So example is 103. So basically here I'm trying to tell, will Act override the AOA, MOA? Yes. But in the Act only if permission is given, whereby AOA and MOA can do something which is beyond what is there in the Act, then you can do so. For example, quorum, the articles can say you can have a larger quorum. That's what I'm trying to tell. That's what there is to it. Very simple. So if any provision is contained in MOA, AOA, which is inconsistent with the Act, such transactions are void. Yes. So the moment MOA and AOA are registered, the moment MOA and AOA are registered, then what happens? You will become the company. There will be a corporate veil that comes in front of the promoters. So basically in front of the subscribers. So what happens? It will be the company will now be called as an artificial person. It will now be called as a separate legal entity. It will have perpetual succession. It will have separate property. It will have the capacity to sue other people. And you can transfer the shares, freely transfer the shares in case of public company and restricted transfer in case of private company. And the liability would be limited. Liability would be limited. There are various case laws, Solomon versus Solomon, Lee versus Lee farming and all those things. And the moment you register the MOA and AOA, all provisions of MOA and AOA are binding on the company and the members. That is what Section 10 says. That's what Section 10 says. So that's all about the preliminary, guys. Now moving on to incorporation chapter. It's all easy. Incorporation. Every company shall file the following documents while you are incorporating the company. You have MOA, AOA signed by the subscribers. Form number INC 8 is a declaration by the advocate, CA, etc., saying that the company has followed all the rules and regulations. And affidavit in INC 9. Now this become a declaration for each subscriber that he is not convicted of any offense. So the promoter should say that, boss, I am not convicted of any offense. Don't worry, I am not a fraud guy starting the company. And I have not been convicted or guilty of any fraud or any offense under the Act for the past 5 years. Before that, if it has happened, that is, ignored. Yes. Registered office details and all these things will be there. So guys, all this procedure is completely simplified now practically because of a concept called SPICE. I'm sure you know that. Simplified Proforma of Incorporation of Company Electronically, SPICE. Things have changed, but in the institute, they've still retained these things. That's why we are doing that. But anyway, SPICE also they can ask you. Same forms are there, but everything is now into one form called INC 32. That is what SPICE talks about. But normal method is this. So if they ask you SPICE specifically, then you have to write SPICE, INC 33, 32, 33, 34. So 3 forms, I mean, in that 33, 34 is AOA, MOA. That will be uploaded in INC 32 itself. That is SPICE. But if they ask you the full procedure, then you will have to write all these provisions. Then, apart from that, you also have to form something, file something called form number DIR2, DIR12 and DIR2 both. DIR2 talks about consent of the director, whereas DIR12 talks about if the director has, any interest in anything. In the sense, is he a member or is he a director of some other company? All that you have to mention. And DIR2 is the consent, saying that, yes, I wish to be the director of the company. ROC to issue a certificate of incorporation in form number INC 11. Sir, should I remember section numbers in the exam? No. Should I remember the form numbers? If possible, yes. Section numbers also not needed. If it is possible for you to remember, you remember. Otherwise, it's okay. Don't worry. So should I remember subsection number, clause, proviso number? Not needed. Just the main section number would be good enough. So ROC to issue what? Certificate of incorporation in form number INC 11. ROC will also allot SIN. SIN is what? Your corporate identification number. COI is what? Certificate of incorporation. Very, very simple. Now, when I'm furnishing this, if at all I furnish some wrong information, then it will amount to fraud. There's a fraud section 447. Everybody will be liable under section 447. So the tribunal may pass such order in public interest saying that, you have committed this fraud and started this company. So under 447, they can open up the proceedings. They can lift the corporate veil and make every person liable. They can make the directors liable. They can make the members liable, and they can immediately ask for winding up of the company. Deadly powers of tribunal. Can be asked for 2-3 marks. What are the powers of the tribunal? If the false information is furnished in while starting the company. So they can pass such orders in public interest. Direct the liability of the company shall be unlimited. Direct removal of company from the ROC. Then what? Pass a winding up order. All these things can be done. But in India, we are a civilized society. Before doing anything, we have to follow PONJ. PONJ means what? Principles of natural justice. I need to give them an opportunity to speak. It is called PONJ. Then guys, Section 8 company, charitable organizations. More you will study in CA Foundation only you would have studied. So I will not delve deep into this. So it's fine. That's nothing there in that. Next, moving on to section number 10 and 11. Section number 10 is omitted by the Companies Amendment Act. Section number 11 is called Commencement of Business. So in commencement of business, a company having share capital shall not commence any business if they have not filed a declaration. So earlier there used to be certificate of incorporation and certificate of commencement of business. Now no need of certificate, but to prove that you have started the company, you should give all these things. You should give a declaration by the director in form number INC 21 that every subscriber to the memorandum has paid the full amount of whatever he has subscribed for. And more importantly, the company has filed verification of its registered office. More often than not, I still used to just open companies and used to create fake companies. Any person used to create fake companies. And when anybody came to see the company, it was a toilet, it was a shed, it was a garage. There were sham companies being opened. To stop that from happening, government has inserted this section whereby they're saying, boss, first file a declaration. Second, show me, send me the full verification of the address, give the geotag location, show me pictures of the building, pictures of the facade of the building, and take pictures of the company secretary, CEO, MD and all, and give it to me. That is there. So if there is a default, then it will be a problem. If no information or declaration is filed within 180 days, or if the ROC has reason to believe that you are not carrying on any business, then deadly. What will happen? They can remove the name of the company from the ROC. Remove the name of the company from the ROC. Guys, is penalty and all important to remember? The problem is you cannot remember so many figures. So if possible, you remember, otherwise no. One example is a difference in what are the changes actually. If you see the amendments also, many fine has been converted to penalty. What's the difference between fine and penalty? Fine is imposed, penalty is imposed by the internal adjudicating mechanism. Means penalty is always levied by the ROC or regional director. Penalty, whenever the act uses the word penalty, it is always levied by whom? The registrar of companies or the regional director. Whereas fine is levied by whom? Fine is levied by courts. That is NCLT and other High Court, Supreme Court, whatever. Now here it is for company law purposes. It is National Company Law Tribunal. Fine is done by whom? Fine is levied by whom? National Company Law Tribunal. And penalty is levied by whom? Regional director. Let me just change the mic, guys. 1 second. The battery, sorry, not the mic, battery. 1 second. All right. So I hope you are able to understand, my dear friends. So it's a thorough, quick revision. Okay. Very, very, very thorough, quick revision. Cannot obviously sit and do each and everything in depth. So the name suggests it's revise and recall. Come on. Let's recall. Now, Registered office of the company, again, it's an important area. Registered office, a company within 15 days of incorporation will have the registered office and all the documents will be received there only. Verification is very much important. Within 30 days of incorporation, I have to verify and send it to whom? To the ROC in form number INC 22. Otherwise, it will be created, it will be taken as, what do you say, a breach. And it will be resulting in you striking off your name from the company itself. Then when you change the name, no, the new name also has to be added. All that is fine. And whenever there's any change in the registered office, etc., you have to keep giving notices to the ROC within 15 days. 15 days of any change as such. Now, if the company has changed its name during the last 2 years, for example, MetLife became PNB MetLife, has changed the name. You had an insurance company called ING Vaishya. ING Vaishya changed the name to Exide Insurance. So like that, if there is a change in name during the last 2 years, what should you do? It shall paint or affix such name with the new name. It will paint. Basically, in every document, etc., you should have saying that MetLife, previously called as PNB MetLife, ING Vaishya, previously called as Exide Insurance. Sorry, Exide Insurance, previously called as ING Vaishya. Like that, we should write. And in case it was an OPC before, now converted to a company, the word OPC should be mentioned in brackets below the name of the company, is what they say. Alteration of objects clause of memorandum. Objects clause, how will you alter? How will you alter the objects clause? So a company will again pass what, guys? I always told you, anything for related to MOA except capital and name, especially name, which name? Compulsory change of name. In all other cases, special resolution and MGT 14. So listed company, special resolution for alteration object clause should go through another procedure called postal ballot. So postal ballot is another procedure that you need to follow. In postal ballot, generally the meeting only will happen when you pass it through the postal ballot. Generally, the meeting will happen in person. The voting can happen online. But here in postal ballot, the entire documents are sent to everybody, and that itself is deemed to be the meeting. That is called postal ballot. Yes. Then Articles of Association is the internal regulations of the company. We have seen that. Articles will also give the internal regulations. If you go against the articles, articles can be amended. And also, for example, articles say director cannot borrow more than 10 lakh rupees for the company. The director goes ahead and borrows 15 lakh, but that full 15 lakh will use it for the company. This is something ultra vires the articles. Now, can it be ratified? Yes. Anything ultra vires the articles can be ratified. Ratified means approved. Anything against MOA, can it be ratified? No. Anything against MOA cannot be ratified. But MOA can be changed. Similarly, AOA also can be changed. That's called alteration. So contents will have everything, guys. It will have all the internal regulations, adoption of preliminary contracts, issue of preference shares, allotment of shares, anything for that matter. Again, guys, a company by special resolution will alter the AOA as already discussed. Yeah, every alteration made in the MOA or AOA in a company shall be noted in every copy of the MOA and AOA. Should be noted, and the new things also should be filed. There is something called entrenchment provisions. And what are entrenchment provisions? Very simple. There are certain regulations in the company, 1, 2, 3, 4, 5. They are called in the Articles of Association. Each point is called as a regulation. If I want to alter any of these things, obviously I would pass a special resolution. We know that. However, let us say I want to protect point number 2 and point number 5. I'm just saying example. I want to protect point number 2 and point number 5. I will insert point number 6 saying that if I want to alter point number 2 and point number 5, if I want to alter point number 2 and point number 5, I need a 90% majority. Generally, if I want to alter any point, I will require 75%. But I can restrict it further by adding the sixth point in my example, where I will say, if I want to touch point number 2 and point number 5, if I want to touch point number 2 and point number 5, I would need a 90% majority. This, my dear friends, is called as entrenchment. Inserting point number 2 and point number 5 is called as entrenchment provisions, where I am going to add points which are more restrictive than a special resolution. I repeat, I am going to add points which are more restrictive than a special resolution. Now, to insert the sixth point, into the articles, this should have been inserted at the time of incorporation only. Now, if it is not inserted at the time of incorporation, what do I do? If it is not inserted at the time of incorporation, then I have to again amend the articles. Obviously, how will I amend the articles? By passing a special resolution in case of a public company. But in case of a private company, my dear friends, all should agree. All should agree. All means all. Unanimous resolution. This is to insert the sixth point, right? So either it should be at the time of incorporation, or I will amend the AOA now by passing a special resolution and insert the sixth point. Or in a private company, everyone will agree to insert the sixth point. And what will sixth point do? Sixth point will protect second point and fifth point. Sixth point will say, if I want to change second point and fifth point, you need 90%, you need 85%, you need 87%, whatever percentage you can do higher than special resolution. These provisions are called as entrenchment. It's called as entrenchment. Copies of MOA, AOA will be given to all the members. MCQ question, within how many days? Within 7 days of the request, they have to give. Otherwise, penalty will be levied. Moving on, service of documents. So I'm just seeing whatever are important areas I'm revising. Everything we cannot do as discussed already. So service of documents. Service means what? Where the documents are served means given to somebody else. If I give the document to you, it's called issue. When you receive it, it is called service. The service of documents. How will I serve the documents? Can I serve the documents to any officer of the company? Possible. A document may be served on a company or an officer by what? How? Officer of the company means what, guys? Any employee of the company, CEO, CFO, a normal employee, accountant, everybody. Then company secretary, MD, all these people are called as officers of the company. Even directors of the company are called as officers of the company. What about watchman? Is watchman called as an officer of the company? No. Watchman is a mere employee of the company, not a, officer of the company. A document may be served on the company as an officer thereof, to an officer thereof. How? By sending it to the company by registered post, by speed post, by courier. The moment I send it via registered post, speed post, or courier, and when you receive it, it's called served. By leaving it at the registered office, by going personally and leaving it at the registered office, or by electronic form, by email, fax, etc. This is for what? Service to officer. Who will serve? Anybody serving to officer. How will I serve to ROC or member? Now, company will keep sending some documents to ROC. When is it considered to be served? Or company will have to send some notices of the meeting to shareholders. When is it considered served? Again, by sending him by a post, registered post or speed post, by delivering at his office or address, by delivering at his office or address, by means of electronic or prescribed mode. That is again email. Delivery by post, obviously always remember, whenever I deliver anything, 48 hours should be taken as postal transit. So today, if I am posting something, 21st October, assume this randomly, 22nd and 23rd should be excluded from the calculation. 22nd and 23rd must be excluded from the calculation. It should be seen like that. Now, this also is important. How will I sign the documents? How will I sign the documents? Authentication of documents. what document is deemed to be signed? It said that any contract or any document, even a contract of the company, can be signed by whom? Any KMP, key managerial person. Who is key managerial person? MD, CEO, CFO, CS, one level below the MD also, one level below the sales director, any person. Say the sales manager, so to speak. Manager means manager as per Companies Act, not as per normal manager rules that you know. By any KMP or any officer or employee of the company, duly authorized by the board in this behalf. So who can sign the document, guys? Any key managerial personnel can sign. Any officer or employee of the company also can sign. Can be asked in MCQ, but they have to be duly authorized by the board. They should be duly authorized by the board. So foreign company is what means a company or a body corporate incorporated outside India, but it has a place of business in India, physically or electronic mode, and it conducts any business activity in India. So it should have a place of business either directly or indirectly through online mode also you can do. So you should obviously file certain documents with the foreign company also. There is one peculiar provision with respect to foreign company under section 379, which says if the citizens of India or any company body corporate in India is having more than or equal to 50% of the paid up share capital, equity or preference in a foreign company, that foreign company is deemed to be an Indian company. That foreign company is deemed to be an Indian company. For example, if Reliance or let's say Mukesh Ambani has 50% share in some foreign company, let us say XYZ Limited, foreign company. Then for the purposes of this act, XYZ Limited, which is a foreign company, will be deemed to be an Indian company, and all the provisions of the law with respect to foreign companies and with respect to Indian companies will also apply to that particular company. Right? Yes. Now, important guys, one person company. I'll give you a break in a while. We'll have a short 5 to 10 minute recess. I know because it's difficult for you to sit continuously. You've just taken 1 hour. We will do it. No problem. One person company. There have been some amendments. Important. One person company means what? Means a company which has only one person as the member. A company which has only one person as the member. It's called as a one person company. What is a small company? Small company, see, one person company is also a private company. One person company is also a private company. Small company is also a private company. What is a small company? A small company is a company where paid up capital is less than or equal to 2 crore and turnover is less than or equal to 20 crore. Both are this important because guys, small company definition has again changed in September 22, which is not applicable for November 22 exam, but it will be applicable for May 23 exam. What is the change? We will not discuss. What is the change? We will not discuss. So, but please remember this and go for November exam. Which means last time ever they can ask about small company, these limits will be November 22. For May 23, there is a slight change. We will not discuss that now. We are only doing for now. As of now, revision is for November 22. Then OPC can be company limited by shares. It can be company limited by guarantee or limited by shares and guarantee. All that is fine. Now you see here, changes have come in the definition. That's why this is important. Who can have a OPC? Who can open an OPC? This is the change. Only a natural person. Means what? Can a company open one more OPC? No. So one company cannot open one more OPC. It should be a natural person. Second, it should be an Indian citizen. You should be an Indian citizen undoubtedly. Earlier, only residents were allowed. Earlier, only residents were allowed. Now, it says resident or otherwise. Otherwise means what? Other than resident. Means what? Non-resident is also allowed. A non-resident is also allowed. Resident in India or otherwise. Non-resident is also allowed. But it should be an NRI, not a foreigner. Foreigner not allowed. Foreigner not allowed. If you are a resident, because when you are filling the form, now you should fill whether you are a resident or otherwise. So if you are a resident, what is the criteria for residency? That also they have given. Your stay in India must be minimum 120 days in the immediately preceding financial year. Your stay in India must be minimum 120 days in the immediately preceding financial year. This also was some 180 or something. They made it 120 now. Important change. Indian citizen, resident or otherwise. Otherwise means non-resident Indian. In the form, you should file whether you are resident or otherwise. How will you file this? If you are a resident, you should stay. You should say that you should have stayed in India for minimum 120 days. When? In the immediately preceding financial year. In the immediately preceding financial year. Sole member only will be the nominee, nobody else. No person shall incorporate more than one OPC. One person A cannot have two OPCs or become a nominee in more than one OPC. So if there is a person A, he can have OPC 1. He cannot have OPC 2. But can he be a nominee of OPC 3? Yes. Can it be one more nominee? No. Basically, one person can only have one OPC. Very simple rule. One person can only have one OPC, or he can be a nominee of one more OPC. Not just or, it's and also. Basically, at any point of time, one person can have one OPC and he can be a nominee of some other OPC. One person having two OPC is not possible. One person becoming the nominee of more than one OPC, not possible. So no person shall incorporate more than one OPC or become nominee in more than one OPC. If a natural person being member in OPC becomes member of other OPC, within 180 days, he needs to vacate or leave any one OPC. So, for example, A is a OPC 1 is a member, nominee of OPC 2. That other fellow OPC 2 member dies. Now what happens? I will now become a member. Can I become a member in two OPCs? Not possible. But the law says you came because of law here because that other person died. What should I do? Within 180 days, I should vacate or leave the other OPC. No minor shall ever become a member or no minor shall ever become a nominee of OPC or hold shares with beneficial interest. So, minor, as per Indian Contract Act, agreement with minor is void ab initio, Moiri Bibi versus Dharmadas Ghosh. Hence, it is not possible. So, contract by OPC with sole member is also a director. Yes, it is possible. You should ensure all the other provisions are there. Moving on, guys, we have already seen private company by its articles restrict the right to transfer the shares, limit the number of members to 200, prohibit any invitation to the public. But in this 200, who are excluded? Present employees and member of the company. Past employees who are members of the company should be excluded for sure. And I can alter my articles, no problem. Minimum number of directors in a private company must be 2. Associate company means what? 2 clause 6. A company which has significant influence over the other company. What is significant influence? Minimum 20% total voting power. TVP. TVP is nothing but equity share capital. Total voting power. That is called associate company. Subsidiary company means what? Subsidiary company is a company here. Subsidiary company means a company in which the other company called holding company controls the composition of the directors. So if A Limited, B Limited, A Limited can appoint 6 out of 10 directors of B Limited. A Limited can appoint 6 out of 10 directors of B Limited, then A Limited is called as the holding company. A Limited will be called as the holding company. Or controls more than 1/2 of the total voting power. So it controls more than 50% of the total voting power. Then also I am called as a subsidiary. So either it can be directly or indirectly. So if A Limited controls in B 60%, B Limited controls, let's say 40%. So 60% of 40%. How much is A controlling in C indirectly? Indirectly 40. I mean, what is the percentage? 60% of 40%. That is 24%. 60% of 40%. That is 24%. Apart from that, A is directly having some, let's say, 40% share. A is directly having some 40% share, or A is directly having, let's say, 30% share. So is B a subsidiary of A? Yes. Is C also subsidiary of B? No. C is not subsidiary of B because directly it has only 40. But is C a subsidiary of A? Yes, because directly it has 30, indirectly it has 24, overall it has 54%. That is point number 1. What about subsidiary of a subsidiary? A controls 60% in B. B controls 60% in C. If you now think about it, A will it have any shares in C? As of now, no. Is B a subsidiary of A? Yes. Is C a subsidiary of B? Yes. But if I use this provision of mathematics here, 60 of 60, 36%. Is C a subsidiary of A? Actually, no. But the law says deemed to be yes. Law says subsidiary of a subsidiary is also a subsidiary of the holding company. Subsidiary of a subsidiary is also subsidiary of the holding company, is what they are trying to tell. Types of companies and all, I'll not go into it. It was there in CA Foundation. You would have already studied all this. We have, apart from that, investment companies, producer company. Yeah. Dormant company, yes, it is slightly important. Where a company is formed or registered for what? One, for a future project. So I have an intellectual property. I want to hold on to that intellectual property, and the project is happening in the future. To hold on to assets or intellectual property, and it has no what? Significant accounting transaction. Such a company is called as dormant, or a normal inactive company is also called as dormant. Inactive company means what? A company which has not filed, which has not had any business transactions, and no significant transaction it has, and it has not filed annual returns and financial statements in the last 2 financial years. So dormant company is either an inactive company, or it is a company which is there to hold on to a future asset, and it doesn't have any significant accounting transaction. No significant accounting transaction. But if a company which was active, suddenly can it become dormant? Yes, it can become. It will now be called as an inactive company. When is it inactive? It has no significant accounting transaction in the past 2 years, and it has not filed what? Financial statements and annual returns. It has not filed financial statements and annual returns in the last 2 financial years. in the last 2 financial years. Right now, let's take a 10-minute breather. Yes, small break is in order. Let's take a break, my dear friends. 10 minutes, then we'll come back. I'll just put up this. Let's come back. I hope you are understanding. 10 minutes. Okay. See you soon. All right, my dear friends, let's get back. Hope you had a short break. Okay, so now let's discuss promoters. So who are promoters? Promoter is a person who starts the company. He is the person who gives the initial idea for the company. He is the person who obviously signs the, subscribes to the memorandum. Sometimes, of course, more often than not, promoters will be the subscribers themselves, whose name will be mentioned as such in the annual return, who has control over the affairs of the company is called as a promoter. So a person who helps start the company, in the sense that if you're a chartered accountant and you help in incorporation, you are not called as a promoter. Like a professional will be not called as a promoter unless the professional also does something extra. So let's say you're starting a company, but the professional will now say, I'll help you get shareholders, I'll help you get more business. Then he will also become a promoter. So it originates the entire scheme of formation of the company as such, with respect to drafting the MOA, finding the bankers, finding the brokers and legal advisors, finding the first directors. All that will be done by the promoter. Now, when the promoter enters into a contract on behalf of the company, company is still not in existence. That's the beauty. Company is not there only, but the promoter has to enter into contracts with everybody. So how will that happen? Those contracts are called as pre-incorporation contracts. So promoter is personally liable because the company is not yet formed. But are pre-incorporation contracts valid? As per Indian Contract Act, it is void, because you are entering into a contract with somebody who is not even in existence, on behalf of somebody who is not even in existence. But there's a special law called Specific Relief Act, which says that yes, it will be valid if upon registration of the company, the person, the shareholders ratify. The shareholders ratify, then it will be valid. That's what it is. As far as and of course, the promoter should not make any secret profit, etc. That is not possible. But what are the liabilities of promoters? This is the entire set of liabilities, my dear friends. Incorporation of the company. If you incorporate the company by furnishing wrong information, 447, fraud. And if you are supposed to state something honestly in the prospectus, you have misstated the prospectus, again, 447. All civil liabilities will be there, where you have to refund everything, and you have to compensate for the loss or damage done with the knowledge. Civil liability is there. Apart from that, there's also punishment for fraudulently inducing any other person to invest in the company. That is also there. Everything leads you to 447. And if you have contravened any of the private placement related provisions, amount involved is 2 crore or whatever the amount involved, or 2 crore, whichever is higher. Company will also refund all the money. And ultimately, if you fail to cooperate with the liquidator of the company, you will, as an imprisonment section, 6 months and fine of 50,000. Of course, criminal liability for misstatement in prospectus, the criminal liability is 447. So deadly provisions for liability of the promoters, because promoters are form important part of the entire scheme of things. Next chapter, prospectus and allotment of securities. As you can see, quickly we are revising all the chapters so that it is really helpful for you. Very quick revision. Okay. Yes. Chapter number 3. So today we'll try to finish we will have to finish 35 pages. And tomorrow, again, remaining, I think around 36 pages, we have to see. All the important areas we will see. When you cannot sit and do each and everything, at least 60-70 marks if you have covered. Rather than a 3-hour session, I requested them to do a 6-hour session because I could cover more. That's the only reason. Yes. So prospectus and allotment of securities, private placement and promoter, section 2, clause 70. Any document issued as a prospectus and includes a RHP or a shelf prospectus is called as, basically prospectus is of normal, any document issued. Apart from that, it's also called as RHP, also called as shelf prospectus. We'll see that later. Yes. So that creates an invitation to the public to subscribe for the shares of the company. Basically, guys, prospectus is what? It is a invitation to offer. It is not an offer, it is an invitation to offer. So you have what? One is public company, one is private company. Public company may issue securities to the public through prospectus or through a concept called private placement, or it can also do a right issue or a bonus issue. Whereas private company can only do two things. It cannot go through a prospectus, it cannot make a public offer because it's a private company. It can go via private placement or right issue or bonus issue. What is in prospectus? Let us see some important areas. Everything we can't do. Yes, if a prospectus is issued in contravention of the rules and regulations, then company has to pay how much? Minimum 50,000. It can go up to 3 lakh. A person involved, he is imprisoned for 3 years and fine 50,000 to 3 lakh or both. So both he will get. Again, prospectus is very, very important to understand. Now, if I vary the terms of the contract referred in prospectus, or if I change the objects for which the entire prospectus was there. So in prospectus, there should be object. Why am I? First is how much money you need. Let us say 40 crore. Second, why do you need so much money? So I'll give the objects clearly. Now, the company can change the terms of the contract or the objects for which the prospectus was issued only by passing what resolution? By passing a special resolution. By passing a special resolution. Notice should contain the following. It should contain the original purpose or object, total money raised, money already utilized, unutilized amount, particulars of the proposed variation. Everything should be given here. Notice can be published either in, both in English and one in vernacular newspaper. And guys, I have invested in your company because your company was into education. Suddenly, you are now changing the objects of the prospectus from education to something else. Let's say to scientific research. Now, I do not want that. So, I don't like it. Will I get my refund? Yes. So, I am a shareholder who is not agreeing to this. If I am a shareholder who is not agreeing to this, I am called as a dissenting shareholder. I am called as a dissenting shareholder. So, yes, a dissenting shareholder shall be given an exit offer by promoters at such exit price. So, there will be an exit offer with an exit price. He has to take up the thing and go ahead. Okay, that is regarding that. Dematerialization of securities. Yes, all the securities now have to be in demat form. Every company making public offer and such other class of companies. Now, this other such class of public companies will also involve unlisted public companies. They have to now do what? Allot everything in demat format, dematerialized format. Apart from that, there's something called as shelf prospectus. What is shelf prospectus, guys? Any company may issue shelf prospectus if they are doing more than one issue every year. Basically, if I am a company which is into finance, so I issue 5% debentures today, 10% debentures 3 days later. 2 months later. 40%, sorry, not 40%, 11% debentures 6 months later. So I have made up my mind to have around 4 to 5 issues during the year. If that be the case, I can issue one prospectus today called as shelf prospectus. So at the beginning only I will issue something called as shelf prospectus, and as and when there is any change, I will issue things called IM, information memorandum. So if you see, shelf prospectus may be filed with the ROC at the stage of the first offer of securities. The validity of the shelf prospectus is 1 year. No further prospectus is required. The beginning of the year only I can issue a shelf prospectus. On every subsequent issue, company needs to file IM, information memorandum, containing new charges created, change in the financial position, etc. All these things. If any advance money is received from a person, the company shall intimate the changes and if required, refund within 5 days. This is the entire scheme of things. So allotment of securities and issue of certificates. So what do you mean by share? As we define, definition is very strange, you know, and very interesting. A share means a share in the share capital of the company, and it includes stock as well. There are rules of allotment. Allotment should be made by the proper authority. Allotment should be made within reasonable time. Allotment should be absolute and unconditional. Means what? There should not be any conditions attached to any allotment as such. What do you mean by securities here? Securities is defined as SCRA. That is share, stock, bond, debentures, derivative instrument, units of collective investment scheme, security receipt as per surface, unit of mutual fund, government securities. All these will be defined in the word security. Moving on. What all should I do when I'm issuing securities? I should give the list of all the allottees, names of the shares allotted, number of shares allotted, bonus shares which are issued. A copy of the ordinary resolution also should be attached. Copy of the contract duly stamped also should be given. Everything. An allotment letter should be filed in a form called PAS 3. That is what regarding that. So guys, minimum subscription value should be achieved. Minimum subscription value. So you know that minimum subscription is 90%. That minimum subscription should be achieved. And apart from that, share application money, minimum application value shall not be less than 5% of the nominal value of the shares. So 5% is as per Companies Act. For SEBI, you have different regulations. So if the nominal value, if it is at, let's say 100 rupees is the face value, I'm just giving an example, minimum 5 rupees you should take on application. This is as per Companies Act. Whereas the entire subscription, or if I'm making an offer, 90% at least has to be subscribed by the public. If it is not subscribed, you can hire one more person called underwriter who will help you do the needful. Now, there is something called as red herring prospectus. So red herring prospectus is used in a method called book building, whereby you do not know the price of the, you don't want to fix the price of the, share. So basically you have just want to go for an IPO. You have no clue about what price to quote. So what you do, you will ask the public itself. You will ask experienced investors what according to you is the value of the company. Correct. So even when any coaching institution or for example SIRC wants to fix the rate, they will see what was the market trend, how much can I do, affordability, everything. So and also the value of the classes. So similarly, company should also ascertain the value of its company through valuation mechanism, and also what is the perceived value in the public domain. So they will ask the public only, how much are you willing to pay? Before that, they will issue something called as RHP, red herring prospectus. RHP, it is called what? Red herring prospectus. That is what it is. Red herring prospectus. So that you see, a company proposing to make an offer of securities may issue red herring prospectus prior to the issue of a prospectus. Red herring prospectus is filed with the ROC 3 days before the opening of the subscription offer. 3 days before they will open the RHP. When RHP is filed as a prospectus, variations must be highlighted. So guys, first I will give you RHP 3 days before, then I will ascertain everything, and the price will be fixed. Once the price will be fixed, the RHP will be converted to a normal prospectus, and that normal prospectus has to be filed with the ROC later. So basically, prospectus is filed later when the total capital raised and the closing price. Initially, when I'm issuing the RHP, closing price is not fixed. But after I file the RHP as a regular prospectus, the total closing price also would be fixed. Now, prospectus will be some 400-500 pages. Every time should I give this 400-500 pages? The answer is no. That is why there is one more thing called abridged prospectus. Abridged prospectus is a condensed prospectus which contains the salient features of the important features of the prospectus. So that definitely should be filed. That should be filed. If you do not do so, if that should be provided, if it is not provided, 50,000 penalty. Do I need a abridged prospectus for everything? No, it is not needed for underwriting agreement. So if I enter into a contract with an underwriter saying that if my shares are not subscribed, you please subscribe for the shares, then that is not called as, prospectus has to be given, but abridged prospectus need not be given. Similarly, if I am not issuing shares to the public, but I'm issuing shares as a private placement, then also abridged prospectus is not needed. Abridged prospectus is not needed. Okay. Yes, Sriram, let me take you to that question. Yeah. A company allots securities to any person being offered for sale to the public shall be deemed to be the prospectus if the conditions are satisfied. Whole amount of consideration is not received by the company and securities are issued to the public within 6 months. So if I give my shares to an underwriter, see, when I say underwriter does many things. He just doesn't, take over the shares if nobody takes. No, underwriter will also help in is a merchant banker, investment banker, issue house. What will they do? They will also take it up to issue shares to the public. So he will end-to-end services he will provide. He will buy shares from you. He will allot to the public. Allotment, everything is done and money will be given to you. So now, when I am allotting the shares to him, do you think full shares I will give it to him first? He will transfer to the public. Basically, he is taking care of my entire issue. But the promoters and the other people need not bother about it. I will hire professionals. When I give the shares to the professional, now tell me, should he pay the full amount to you? No, he's an agent. He will sell and only then give the amount to you, right? So when he gives the amount, when I give the shares to that agent, will he pay the full consideration to me? No, he will not pay the full consideration, and he should allot those shares to the public within 6 months. If these two conditions are satisfied, then when I give shares, when I allot securities to that particular agent, which is now being offered to sale to the public, that prospectus is called as deemed prospectus. Did you understand, buddy? Just give a thumbs up if you understood. That's called deemed prospectus. Okay. Yes. Moving on. Prospectus, criminal liability for prospectus. Deadly liability it is for misstatement in prospectus. Yes, a prospectus which is issued, circulated, includes only any statement which is untrue or misleading, where the omission is likely to mislead. In all these cases, liability or punishment is what, guys? 447. Liability or punishment is 447. Deadly punishment. What is the punishment here? Imprisonment, minimum 6 months, maximum 10 years. Imprisonment, minimum 6 months, maximum 10 years. And fine is amount equal to the fraud. Maximum 3 times the amount of fraud. Imprisonment, minimum 6 months, maximum 10 years. And fine is the amount equal to fraud. Maximum 3 times the amount of fraud. 3 times the amount of fraud. If fraud involves public interest, then minimum imprisonment is 3 years. If fraud involves public interest, minimum imprisonment is 3 years. So minimum is 6 months, maximum is 10 years. If fraud involves public interest, imprisonment minimum will be 3 years, 3 years to 10 years. Public interest is again not defined in any law, but public interest depends on the facts of the case. And of course, anything that affects the interest of the general public, overall interest, if it affects, it will come there. Who is the person liable? Of course, the company is liable, and every person who is the director of the company has authorized himself to be named in the prospectus as a subscriber, and promoter of the company, all these people will be liable. All will be liable. And will they be personally liable? Yes. This protection, sometimes 3 marks they will ask you. If I am an expert, for example, or if I am a person who has signed something in the prospectus, can I say that I will not be liable? Yes. If he has withdrawn his consent before the issue of the prospectus, after giving his consent, he has realized that you have told some other details to me, and whatever you told was not matching to what you told me when I was actually signing the prospectus. Basically, if I am an expert who has signed the prospectus or who has given a certification, later I get to know more details about the company which I had not known before, then immediately I will withdraw my consent. If I withdraw my consent, tomorrow if any misstatement happens, I am protected. Or without my knowledge, they have already taken my name. Without my consent, they have published the prospectus. I have never said yes to it. So that also I can take protection if I can prove. If the prospectus was issued without his knowledge, on becoming aware of the same, he has given a public notice. He has given a public notice, a newspaper advertisement saying that this company has used my name. Kindly do not go ahead with it. I will not be responsible if you assume that I have authorized this prospectus. Then you can protect yourself. 3 marks question generally they'll ask, what is the protection mechanism? If any expert gives a misleading statement, or valuation, the director has to prove that it was a fair and correct copy of the same. And he had reasonable ground to believe that expert was competent to make the statement. Now, I am a director, you are an expert. I do not know about share valuation. So I can tell the outsider saying that, boss, you cannot sue me for misstatement because that particular share valuation I did not do. I have hired an expert. He was supposed to do. If he doesn't do, I cannot help it. So I for sure know that he is a very good person. He is a qualified person. My job when it came to share valuation was just to appoint a good expert. If he did not do his job properly, you cannot sue me for misstatement. That is the case. Okay. Yes. Again, guys, if I induce fraudulently, if I cheat someone and induce him to sort of invest in the company, punishment again under 447 will be there. 447. Deadly punishment. On the other hand, if I make a personation, impersonation means what? My name is PJ. One more person is JP, Jay Prakash. I will change the KYC norms, change the Aadhaar card, all that is possible in India. And I will come out with a new identity, JP. And I will buy securities. That is called personation, impersonation. Taking somebody's identity, identity theft. Identity theft in the cyber world is really, really true. Correct? So any person who makes an application in a fictitious name, makes multiple applications to the company, again, if proven, 447. And as far as minimum subscription is concerned, section number 39, minimum subscription is the minimum amount stated in the prospectus for which shares are allotted in receipt. Quantum of subscription under Companies Act will be the amount stated in the prospectus. Under SEBI guidelines, how much will it be? 90% of the total issue size. 90% of the total issue size. Under Companies Act, what is it? Amount stated in prospectus. Under SEBI guidelines, what is it? 90% of the total issue size. So obviously we have to follow the SEBI guidelines also. Both should go hand in hand. In the exam, you can write both. First, you should write amount stated in prospectus. Second, as per SEBI, 90% of the issue size. 90% of the issue size. Done. What is the time limit for minimum subscription amount? Very simple. Under Companies Act, it is 30 days from the date of issue, or the time limit given as per SEBI. So within 30 days, you should get the minimum subscription amount or the time given by SEBI. And what is the SEBI? What does SEBI say? If the issue is underwritten, the issue is not underwritten, then the closing of the subscription list. But majority, everybody goes for underwriting. So if the issue is underwritten, 60 days from the date of closure. 60 days from the date of closure. So the day the subscription list closes, the day the entire offer closes, from that day within 60 days you should get the minimum subscription amount as per SEBI. Not received in the above time limit, then guys there will be a the entire amount must be refunded within 10 days. If you don't refund within 10 days, refund after 10 days will be made with interest at 15% per annum. 15% per annum it will be. Deadly. Right. Quantum of application money, as I told you that time, guys, how much is it? 5% of face value. But SEBI has a different percentage. We should write SEBI percentage also. SEBI, it is how much? 25% of minimum value of security. All these are important MCQ or even the normal questions they can ask you. Not less than 5% of nominal amount or percentage as per SEBI. SEBI is how much? 25%. So what should I follow? SEBI or Companies Act? SEBI, 25%. And minimum subscription amount is how much, guys? 10,000 rupees. Minimum subscription amount is 10,000 rupees. A company having share capital should file a return as to allotment whenever it makes allotment. Within 30 days of allotment, I should file a return saying that this is what has been, what do you say, allotted. These are the shares which are allotted, etc. Coming to Underwriting Commission. How much commission can you give, guys? It's given here, all MCQ questions they can ask. 5% of the issue price for equity or preference share or amount as authorized in the articles, whichever is less. Or 2.5% of issue for debentures or rate, whichever is less. Guys, it is Companies Act says 5% or amount authorized in the articles, whichever is less. Mind you, if the amount in the articles authorized is 3%, it's 3% or 5%, whichever is less. If the amount in the articles is 6%, 6% or 5%, whichever is less. So please see that. If the question is silent, as to what is the rate authorized by the articles, then obviously you should take 5%. Don't take 0% or 5%, whichever is less. No. Don't go by that. In the question, if they are silent about what the articles say, then the rate is 5%. But in the question, they say the company has issued 3%. As per the company, maximum 3% can be given. So 3% or 5%, whichever is less. 3% or 5%, whichever is less is what you need to check. Commission can be paid in cash, in kind, or lump sum, or by way of percentage, whatever it is. Commission can be paid anyway, in kind, in by a lump sum amount, whatever it is. Commission can be paid. GDR has been removed, so it's fine. We need not take that. Yeah. So this is fine. Coming to private placement. Private placement. Again, it can be an important 4 to 6 mark question. What do you mean by private placement? Rather than giving it to the public, if I give it to known people, a close group of people. So private placement generally, guys, is a invitation to offer, and it's a specific offer. More often than not, it's a specific offer. Your prospectus is an invitation to offer. Private placement is a specific offer to a group of people. So what is private placement? Means an offer to a selected group of persons when a company, other than by way of public offer, through issue of a private placement offer letter, PAS 4, private placement offer letter. So it satisfies all the conditions under section 42. What are the limits? Securities made to maximum 200 persons in aggregate. Invitation to subscribe for securities. Maximum limit is how much? 200. All these can be MCQ questions also. 200 persons in the aggregate in financial year, excluding somebody called as QIB, qualified institutional buyer, excluding ESOP. So if I have given 250 to 250 people ESOPs this year, though it is private placement, only given to specific people, it will be excluded from the purview. Right? There's an invitation to subscribe for what? Maximum 200 persons in the aggregate in the financial year, excluding QIB, excluding ESOP. 200 persons would be calculated individually for each kind of security, equity and preference shares and debentures, each kind of security holders, it will be calculated individually. Okay. It is not joint holding, etc. is separate. Individually, that is 200 equity shareholders, 200 preference shareholders. So it's not that if I issued 200 equity and 150 preference, it is not 250. 200 each to each class. Separately, you will have to do it. Value of such offer or invitation per person shall be within investment size of at least 20,000 rupees. So face value 20,000 minimum you should invest in. Company will keep details of investor in the bank account. Joint holders, money payable shall be paid from the bank account of the person whose name appears first. So the name appears first. So 200 people, 200 each, that is equity separate, preference separate. That 200 does not include what? QIB, investment made by QIB, qualified institutional buyers, or investment, made by people, that ESOP, that is employee stock option plan. Next. Prior approval, that is you need a special resolution to make a private placement required from shareholders for proposed offer, and you should give an explanatory statement. Why explanatory statement? Explaining all the details as to why you are shifting and all these things. So why you are, issuing shares private placement. If the offer is for non-convertible debenture, it is enough if the company passes a special resolution for the entire year. So the offer, if it is NCD, non-convertible debentures, then special resolution for the entire year you can give. But if it's a private placement for equity shares, private placement of preference shares, then before every private placement, you should obviously give a explanatory statement along with a special resolution has to be done. So no offer or fresh invitation shall be made unless the allotments of the earlier offer have been completed or abandoned. So in the old offer is running, I cannot make a new offer. Old offer should be over or old offer should be abandoned. Only then I can make the new offer. Time limit for allotment or refund of subscription money. A company making an offer shall allot its securities within 60 days. Allotment should be done within 60 days from the date of receipt of application money. If yes, no problem. If no, then refund within 15 days from the completion of 60 days. If yes, no problem. If no, guys, for the other securities, it was 15%. For private placement, it is 12% per annum from the date of expiry of the 16th day. All these are MCQ questions that they can ask, so be careful. The subscription money should be kept in a separate bank account and it should be used for what? Allotment of securities or repayment of the entire securities. If you are unable to allot securities, repay the application money. This is with respect to private placement. MCQ questions can come. And private placement shall be made only to such persons to whom private placement letter has been sent. Before that only I should give a private placement letter and it will be circulated 30 days and they can accept or reject the same. And once you allot in the private placement, you should file a return of allotment in a form called PAS 3 within 30 days. With all these details must be mentioned to them. And you shall maintain a complete record of private placement in PAS 5. And all the records will be filed with SEBI in PAS 4. If you don't do all these things, no amount involved or 2 crore, whichever is higher, deadly penalty. That is why you should be very, very careful with respect to private placement. Done, guys. Very, very simple. Now let's come to one more important chapter, chapter number 4, share capital and debentures. As you can see, we are discussing quickly everything. Correct? Fast discussion. All fast. It's a revise and recall, my dear friends. So obviously what will happen? It will be a quick revision of all the provisions. So rather than doing like just basics of everything, I thought quickly, thoroughly we will revise. Hope you are able to understand. Yes or no? Awesome. You guys are awesome. All right. I know it was kind of short notice for you. I think we just discussed only yesterday. So that's why probably, you are not ready for the timings, etc. Maybe I'm just guessing. No problem, but it's already done. So I hope you are enjoying. Anyway, this video will be there here on this channel. You can keep watching it later as well. Nothing to worry. Now, chapter 4 is what? Share capital and debentures, section 43 to 72. Section 43. What are the two types of shares involved? Preference share capital and equity share capital. So preference share capital or deemed or participated, and equity are two types with voting rights, with differential rights. This you have already studied in CA Foundation. Nevertheless, everything I will not do, but only this. Equity shares are two types with voting rights. So all equity shares will have voting rights, guys, but with DVR, differential voting rights. What is that? Differential voting rights means you can have the rate of dividend may change, and also the voting rights may vary. Generally, one share is equal to one vote. But if I don't want a hostile takeover, other companies to take over my company, and even generally public would or rather have more dividend rather than voting power. Now, I don't care about voting power, I want more dividend. So to entice such people, I have fixed the dividend at a higher rate, but I'm taking over the voting power. How? I will say 10 shares is equal to one vote. I will say 10 shares is equal to one vote. If I say 10 shares is equal to one vote, then it's called as a differential voting right, DVR, differential voting right. Differential shares can also be with respect to the dividend also. That's called differential voting right. Mark Zuckerberg has reverse. Mark Zuckerberg has one vote is equal to, sorry, one share is equal to 10 votes. So those are called superior right equity shares, SR equity shares they are called, superior right. That's also there. That's also differential only in some way, right? Yes. Numbering, certificate, all that I will skip, guys. There's nothing great. Certificate is no longer there now. Everything is now online. Everything is dematerialized. So there's no concept of securities as such as in physical securities. But anyway, certificate, etc. Leave it. Voting rights. Let me change the battery quickly. 1 second. All right, guys, there we go. Section 47, voting rights of shareholders, voting rights of equity shareholders. Equity shareholders shall always have a right to vote on every resolution placed before the company. Equity shareholders will have a right to vote on every resolution placed before the company. Yes, they can always vote on every resolution placed before the company. The voting right of every equity shareholder shall be in proportion to the share, one vote. Voting rights of, sorry, something happened. Let's reload quickly. Yeah. Voting rights of preference shareholders. Now, preference shareholders have a right to vote only on the matters affecting their rights directly, which means if it's a preference shareholders meeting only, they can vote, or at the time of winding up of the company. Yes, they have a say there because you have to see whether the company can be wound up or not. Then only they can come and they can vote. Third one, matters relating to reduction of capital. If the capital is being reduced, basically you are going to them in your accounts. You have a subject called internal reconstruction, if you remember, chapter, sorry. In that chapter, when you go to them and say, sir, you have given, I mean, your capital is 1 crore. Let me make it 80 lakhs. That 20 lakhs, can you please give it to me? That is called in the capital reduction account or reconstruction account. So in that case, obviously, they have a say. Other than that, they don't have a say. So the right of every preference shareholder shall be in proportion to the share. However, there is something called as earned voting rights. If the dividend on any class of shares is not paid for 2 years or more, then that preference shareholder will now get same voting rights as equity shareholder. So you cannot say when will preference shareholder become equity shareholder, like that should not think, guys. Please don't think like that. That when preference shareholders will become equity shareholders, there's nothing like that. But preference shareholders will get the voting rights of equity shareholders if it's a cumulative, what do you say, preference share issued and dividend is not paid for 2 years or more. Dividend is not paid for 2 years or more. Then, yeah, call should be made or shares of same class to be on a uniform basis. So whenever I make, for example, there is a share of 10,000 shares of 10 each, 8 paid up. Now I'm making a call, 1 rupee extra call I'm making. That 1 rupee extra call, etc., should be uniform. Should be uniform in the sense I cannot say 1 rupee to some people. I cannot take 2 rupees from somebody else. No, it should be uniform, so to speak. However, if there are, what do you say, different classes of shares, then I can do different things. For example, one share is 10,000 shares of 10 each, 6 paid up. One more is 5,000 shares of 10 each, 5 paid up. In this case, of course, the call can vary. But if it's the same class, then obviously the call amount that you call for, 1 rupee, 2 rupees, whatever, should be equal, is what they're trying to tell. As per table F, the calls must not exceed 1/4 of the nominal value of the shares, is what they say. So if, for example, if it is 10 each, maximum 1/4 is what? 2.5 rupees. So, or maybe if the nominal value is 100 rupees, each time when you call, maximum you can call up to 25 rupees. So if you have already called 80, remaining 20 you can call. But if you have already called 70, no? If you have already called 70, you can maximum call only 25 rupees worth. It cannot be more than that, is what they're trying to tell. How do you make a call? Call is made by serving a notice to pay. Notice should specify the time, etc. Generally, there will be around 14 days time for you to pay the call money. If you don't pay, then it's going to be a problem. Then, as I told you, provides for at least 14 days notice. Calls in advance. Now, calls in advance is what? Authorized by Articles of Association. Company can accept the calls in advance even if no calls are made. If people only want to pay in advance, yes, definitely yes. If AOA authorizes, the company can pay dividend in advance money received on calls, but generally, only if the AOA authorizes. Generally, you will not get any extra dividend. Generally, you will not get any extra dividend. Will they get extra voting shares? No. No voting power you will get, guys. But dividend may be paid if the AOA authorizes. But at any cost, you will not get extra voting rights. You will not get extra money in any other sense of the term. Amount received in advance, it cannot be refunded. Today, you cannot pay me extra money. Tomorrow, you cannot come and tell I am in very dire financial need. Can you please return the money? Not possible. Can I get interest on the call money? Yes. Table F provides for a maximum rate of 12% per annum. 12% per annum, you will get, guys, interest. You will get an interest of 12% per annum. Table F provides that. That is for interest on call money. No calls made in advance, so no extra voting power, as already discussed. That is about calls in advance. All this can be MCQ question or a separate 3-mark question, separate 4-mark question. It's going to be like that. So it is very, very important in the scheme of things that we are discussing. Issue of shares at a discount is obviously prohibited. Issue of shares at a discount is obviously prohibited. What is the prohibition? A company shall not issue shares at a discount except as sweat equity shares under 54. Sweat equity, for giving the sweat and for giving your blood and sweat and hard work to the company, I can issue shares at a discount, or I can also give shares for free. Free here means for consideration other than cash. What is the consideration other than cash? You have worked hard for the company, for that I am giving you these shares. However, normally I cannot issue shares at a discount. The only exception seems to be sweat equity shares. Any shares issued by the company at a discounted price shall be void. Any shares issued by the company at a discounted price shall be 100% void. Effect of default: fine minimum 1 lakh, maximum 5 lakh. Every officer in default, what? Imprisonment 6 months, fine minimum 1 lakh to 5 lakh is what they say. This has to be done. This is section 53. Should I pay dividend in proportion to called up money or paid up money, or should it be on nominal value? So guys, always it is on nominal value, but if the articles authorize, then they can pay based on paid up value. So what do you say? Normally, dividend is always paid on nominal value, face value. But if articles of association authorize, then dividend can be paid on paid up value. Section 52, issue of shares with premium. Premium refers to the excess of the share issue price over its face value or par value. So if it is a face value is 10 rupees, if I'm selling at a premium, if the share price today is some 1000 rupees, so basically, 990 rupees is the premium. So share can definitely be issued at a premium, no problem. The rate of premium is decided by the board of directors with consultation with SEBI guidelines. That money that you make, 900 rupees extra, that will be treated in the security premium account. It's called a security premium account. This is very, very important. Security premium account can be used for what? 4 marks questions. So many times they have asked. So many times. So many times. Right? Application of securities premium account. Issuing fully paid bonus shares to members. Writing off of preliminary expenses of the companies. Writing off of what? Expenses incurred, commission paid, discount allowed on the issue of shares of the company. Providing for premium on redemption of any redeemable preference shares or debentures of the company, then it is also used for buyback of own shares or securities under section 68. These are the only 5 uses of what? Application of securities premium account. Securities premium account. Section 54, issue of sweat equity shares. So sweat equity shares means what? Purely issued because of the blood and toil of the employees or directors at a discount, either given the huge discount, though issue of shares at discount is prohibited, exception is sweat equity shares, or consideration other than cash. Consideration other than cash. So other than cash means for the hard work that you have put in. For providing know-how, intellectual property right, or any other value addition, right? Who is an employee here? It's given to an employee. Who is an employee? Employee is a permanent employee of the company who is either working in India or outside India for the last 1 year at least, or a director of the company, whether a whole-time director or not, or an employer or a director as above, of even of a subsidiary company or of a holding company. So basically, employee here is not just that company's employee, it can also be holding company's employee, subsidiary company's employee. Company can issue sweat equity shares only after 1 year from the date on which it commences business. Sweat equity shares must be of a class already issued by the company. So if it's issuing equity shares, then the same class you should issue. Holders of sweat equity shares shall rank pari passu with other equity shareholders. Pari passu means on equal footing. So tomorrow, if there's any winding up, the people who have paid money to the companies, actual shareholders should not say, the sweat equity fellows they have got for free, they should stand behind me. No, all of them are equal. Authorized by what? See, this 1 year and all will not apply for startup, by the way. There's an amendment. So for startup, etc., all this 1 year nonsense will not come. That has been removed. So authorized by what, guys? Sweat equity shares authorized always by a special resolution. You should give what? Number of shares, current market price, consideration if any, classes of directors, all these details will be given. Sweat equity for a listed company should follow SEBI guidelines. For unlisted company, you should follow these rules. Company, share capital and debenture rules of 2014. Yes. For unlisted company, as I told you, company share capital and debenture rules, what do they say? Time limit for allotment, within 12 months you should allot. And ceiling limit, annual limit, shares of issue value 5 crore only should be granted, or 15% of the existing equity share capital, whichever is higher. So guys, you can either give, this is for unlisted companies, not listed company. For unlisted company, share value should be how much? 5 CR, or maximum what? Or higher, 15% of existing paid up share capital. For example, the existing paid up share capital is 100 crore. What is 15%? 15 crore. How much sweat equity I can give? 5 crore or 15 crore, whichever is higher. So I can give up to 15 CR. Total issue of sweat equity shall not exceed 25% of the paid up share capital of the company at any time. So guys, my paid up capital is 100 crore. This time I can issue 15 crore. I have already issued 10 crore. Overall, I have issued 25 crore. Can I issue more than this anymore? No. Why? Should maximum be limited to 25% of the paid up share capital of the company. And guys, if I get sweat equity shares, immediately I'll sell it off in the market and make money. That is why there is a lock-in period, minimum 3 years. It will be mentioned in the certificate. Here, valuation is done by the valuation officer. Registration shall be done in form number SX3. Very, very simple. So that is with respect to sweat equity shares, my dear friends, section number 54. I hope you are able to understand. Yes or no? Thumbs up. Awesome. Section 55, issue and redemption of preference shares. Basic conditions to issue preference share capital. A company limited by shares can issue what? Preference share capital only if the AOA authorizes the same. So first is what? AOA authorization. Second is what? Special resolution should be passed. And there should be no default. What? At the issue of preference share, there is no subsisting. Old default should not be there on payment of dividend of the cumulative preference shares and all those things. What is the time limit of redemption? Can I issue irredeemable preference shares? Not possible. Can I issue irredeemable preference shares? Not possible. It should always be redeemable preference shares. How much? Maximum 20 years is the period of redemption. I can extend the time limit also for infrastructure companies 30 years. Minimum 10% of the preference shares should be redeemed when? From the commencement of 21st year onwards on a proportionate basis. So for infrastructure company, if let's say 100 crore is the debentures, preferences that have taken, minimum 10%, that is 10 crore. 10 crore, 10 crore, 10 crore like that from year 21st to 30. 10, 10, 10, 10 each minimum you should redeem. But by the end of 30 years, full preference shares would be redeemed as the option of the preference shareholder. What do you mean by infrastructure company? All these things, rail, transportation, agricultural, water management, telecommunication, and all these things. So one interesting thing that when you are issuing preference shares, redeemable ones, you should create something called as CRR. So when you are redeeming preference shares, mind you, when you are redeeming preference shares, you should create something called as CRR. This is to maintain the capital balance. Now, let's not get more in depth into it. It will take a different class only to explain that. Leave it. But you already know CRR has to be created. So, transfer a sum CRR, a sum equal to the nominal value of the shares redeemed. It should be transferred from what? Out of the divisible profit of the company. CRR is a quasi capital. It is like capital of the company. So, from the reserves and surplus or from the divisible profits, you will create something called as CRR. CRR, as I told you, is quasi capital. It means it is similar to capital. CRR can be used only and only to issue fully paid bonus shares. So CRR should be used only and only to what? Issue fully paid bonus shares. Provisions of the Act relating to reduction of share capital shall apply to CRR also, as if CRR were the paid up share capital of the company. Means CRR cannot be used for any other purpose than issuing bonus shares. Very, very simple. How will I redeem the preference shares? How will I redeem the preference shares? Obviously, it can redeem the preference shares by issuing new shares or obviously doing any other thing. That is using the profits of the company. Sources, this one. I can use the divisible profits or proceeds of a fresh issue. If I use proceeds of the fresh issue, that it's okay. But if I use the divisible profit, then only I have to create something called as CRR. CRR has to be given. Has to be created. All this you can leave, no problem. Yeah, transfer and transmission. Transfer and transmission. Transfer means what, guys? Voluntarily selling the share from one person to another person is called transfer. Transmission is called operation of law. For example, if a person shareholder dies, his nominee will get the shares. That is called operation of law. Now, the nominee did not want the shares, but the shares are being transferred. OPC, the member is there with share capital, he dies, nominee will get the share. These examples are examples of transmission by operation of law. So, section 44, share on debentures of a company shall be movable property transferred as per provisions of AOA. Section 58, securities and other interests of any member in a public company shall be freely transferable between two or more persons, and it is enforceable as a contract. Of course, whenever I transfer the shares, there should be form number SH4, duly stamped, dated and executed, delivered to the company within 60 days for registration of the transfer. And partly paid up shares also will be registered accordingly. Then a certificate will be granted to you within 1 month. Guys, everything is now demat. With a click of a button, you can change everything. So these are slightly redundant provisions, but anyway. But however, if I'm transferring to the legal heir also, it is as good as transferring to the main person itself. That's what it says. Now, when I am putting, when I'm, let's say, in a private company where, demat shares are not there, physical shares are there. And in private company, generally it is restricted to transfer from one person to another person. So now you, Mr. A, has transferred to me his private company shares. I am going there to deposit this in the company and asking them to change the name from A to PJ, my name. Company refuses. Now that refusal, if it's a public company, what to do? Private company, what to do? It is given here. Refusal of registration and appeal against refusal. That is, private company, company limited by shares, public company, without sufficient causes, refuse. If in a private company, now I go and say, sir, please change the name from PJ to me, from A to PJ, that case. So register the transfer of transmission, intimate within 30 days by the company to the transferor and the transferee. The company will intimate. If it is not intimated, what to do? If it is intimated, what to do? Appeal to the tribunal against a refusal within 30 days. If the company intimates to me, I can file an appeal immediately within 30 days. If they don't intimate only, that 30 days is gone. So that's why 60 days time is given. I will wait for 30 days for the company to accept or reject the proposal. If they are silent on it, then I will take extra 30 days and I can file an appeal. That's why 30 given here, because 30 is already included. Here 60 days is given because I will wait for first 30 days. That's why 30 plus 30. Both are the same only at the end of the day. Tribunal, after hearing the party, this is one part of the story. Similarly, on the right hand side, for public company, same. Within 30 days, they will intimate the transfer and I will appeal to the tribunal. Tribunal, after hearing the parties, they will pass an order, either accepting the appeal or dismissing the appeal. They will direct the company to register the transfer within 10 days or order the company to pay damages. If order is not followed, deadly imprisonment for the person who has to follow the order and fine 1 lakh to 5 lakhs. I'm going to lift the corporate veil and make the people liable there. Got it? So that is what it is. Now, next important area is section 61, power to alter capital. We have already seen this. It requires what resolution? Ordinary resolution. We have seen this in alteration of MOA. What is needed here? Ordinary resolution is needed. Ordinary resolution is needed. There are certain circumstances when share capital stands automatically altered. When is that? Government has invested in some debentures of some company. Government has invested. The company is not redeeming the debentures. The company is not giving back the government the money. In the agreement itself, it is clearly mentioned that the debentures will be converted to shares. Or government has given 100 crore loan to a company and the company is not repaying the loan. In the agreement only it will be mentioned that the loan will be converted to shares. When the loan is converted to shares to the extent of 50 crore, the share capital also will increase by 50 crore. Don't you think so? The capital is changing? Yes. So here, even though the capital is changing, there is no need to pass any resolution under this particular provision. It will automatically be converted. And if you have any problem with that, you can go to NCLT within 60 days. And finally, NCLT will hear both the cases and then pass an order. And according to the order, automatically the shares would have been increased. Next concept is called reduction of share capital. Reduction of share capital is of two types. Without the approval of the court is one. With the approval of the court is one more thing. With the approval of the court is given in section 66, whereas without the approval of the court is two things, surrender of shares and forfeiture. If you voluntarily surrender the shares, it's called surrender. Forfeiture is what? You are unable to pay the call money. That time, the company only will forfeit the shares. 14 days time is given, you will not pay, that's called forfeiture. Whereas surrender is voluntary surrender. Section 66 we will discuss in a while. Section 62, again, this is further issue of share capital. Further issue. It can go through 61(1)(a), right issue, 61(1)(b), employee stock option plan, 61(1)(c), issue of shares on preferential basis. One by one we should see. And moreover, guys, come back here in this surrender and forfeiture, NCLT approval is not needed. Surrender and forfeiture, NCLT approval is not needed. On the other hand, in case of section 66, NCLT approval is needed. 62(1)(a), right issue. Right issue shall be offered to the existing shareholders. Before offering it to the public, if I offer to the existing shareholders, it's called right issue. One of the largest right issues in India was in the year 2020, the peak of the pandemic. Mukesh Ambani had the guts to go for a right issue. He did a right issue on the largest right issues of Reliance. So I think the share price was somewhere around 1,300 or something, 1,600. Now it shot up to almost 2,000 after that. So right issue shall be offered to the existing shareholders. Shareholders who receive invitation to offer to obviously subscribe for the shares. This is called right of preemption. Means I'm giving you a right to buy, your choice. I don't want to buy, no problem. That's called right of preemption. What is the basis for the offer? Basically based on your share capital. If you have 10 shares, I'll give you 1 share, like something like that. So in Reliance, no, they said you should have held for every 15 shares held in Reliance, you will get 1 share. That was the proportion that time in 2020. Of course, there will be a letter of offer. Right offer can be made with a letter of offer. Letter of offer shall state that the offer shall be deemed to have been declined, is not accepted within a specified time. So I will give you an offer saying that within 15 days, please accept it. If you don't accept within 15 days, I will deem it to be rejected. I mean, basically you have rejected the offer. That's fair enough. Number of shares offered also must be given. Manner of sending the notice. Dispatch should be made 3 days before the opening of the issue. So electronic mode, registered post, whatever it is. That is how it is. Now you can either accept it or reject it. Can I sell the right to somebody? Yes. That right can be sold to somebody else also, not a problem. That is with respect to what, guys? Right shares. Next, coming to ESOP, employee stock options, employee stock options. So if the company may by a special resolution vary the terms of the employee stock option scheme, such variation should be well within the limits. If it is not, it should be with the interest of the shareholders only. Now, the options granted shall be not be transferred to any other person. If I give you an ESOP, it is only to you. You cannot transfer to somebody else. Only in some cases, for example, death of the employee, then it can be transferred. It cannot be pledged, hypothecated mortgage. If I have an option to buy the shares of your company 2 years later, and the value of that would be 2 crore, today only I cannot go and give it as a security to some bank and say, please give me money on that particular security. Not possible. It has to be registered, obviously. So you should give disclosure of all these things. Options granted, options vested. Vested means there will be a vesting period, 2 years, like a period where you should stay put. After 2 years, you'll be eligible to buy the shares. Options exercised. So vesting period will be there. In that, you will exercise it later. Options which are lapsed. If you don't exercise, it will be lapsed. And then the price at which you buy the shares will be called as exercise price. All that you will see that. 62(1)(c) is what, guys? Issue of shares on a preferential basis. Means issue of shares or other securities to any select group of people on a preferential basis. It can be public issue, right issue, ESOP, sweat equity, bonus shares. These are not, though they appear to be preferential basis, these are not called 62(1)(c). So 62(1)(c) does not include public issue, right issue, ESOP, sweat equity, bonus shares, depository receipt, etc. will not be covered here. What are the conditions? Articles of association should authorize the issue of shares on a preferential basis. You should pass a special resolution for the same. Securities must be fully paid. Allotment of security should be completed within 12 months from the date of passing the special resolution. So preferential basis, you should finish it off within 12 months. Of course, the valuation report will be done by a registered valuer always. Very simple. 63, issue of bonus shares. Bonus share is the share allotment to the member by the company at its accumulated, out of its accumulated profits. We know that. Profits available, sources of bonus issue. Again, it can be only through issue of fresh, fully paid equity shares, or through free reserves of the company, or your security premium account, or we have already understood CRR. CRR can be used only for bonus. What are the conditions you have to follow? SEBI guidelines only, obviously. And you have to first convert partly paid shares into fully paid shares. And then you can use the company's free reserves, etc. or other things you can do that. The reserve created by revaluation of fixed asset should not be used for bonus issue, obviously. Those should be reserves not out of capital nature, but reserves created of a revenue nature. Even if I use capital profits for issuing bonus, etc., those should be realized in cash. Revaluation reserve is merely a book entry, so it is not possible. So what are the conditions for bonus issue? These are the conditions here. It should be permitted under the AOA. Recommendation and resolution must be there. The board of directors should recommend a bonus issue, after which the company in the general meeting shall resolve to capitalize the profit. So first should be board resolution where they recommend, and then should be shareholders resolution when they will actually resolve. No default in deposit or debt. No default in employees' statutory dues. Partly paid should be converted to fully paid. And it should not be in lieu of any dividend. Means issue of bonus should always be in addition to dividend. If dividend is not paid, instead of dividend, I cannot give bonus. Either it can be both, or only I can give dividend, or only I can give bonus. But instead of dividend, I'll give bonus. All that will be wrong. So for every alteration of share capital, of course, you should file form SH7 within 30 days. Non-compliance will be 500 rupees, all those things. SH7 shall be required in the below cases, as we have discussed: increase in the authorized capital, redemption of redeemable preference share capital, then the share capital is altering, that's why. Reserve capital. What is reserve capital? It is that portion of the capital which is not called up, and it will be called up only in the event of winding up. Capital reserve is the amount that you are getting out of profits, whereas reserve capital is that part of the capital which is not called up, and it will be called up when only in the event when it is going for winding up. Creation of reserve capital, yes. How will you create reserve capital? It's only for unlimited company with share capital which seeks to convert into limited company. That can be applicability. The company should re-register itself as a limited company by passing a resolution. It may create a reserve capital. How? By increasing the nominal share capital, by increasing the nominal amount of the shares, by providing a specified portion of the uncalled capital. Part of the uncalled capital, it will be called up only later. That is called as reserve capital. Next comes an interesting and important area, section number 66, reduction in share capital. An application for reduction in share capital should be done in form number RSC1. Form number RSC1 with 5,000 rupees fees, and the tribunal you have to file it with that. Apart from that, notices will be sent within 15 days. Company will send notices to all the creditors. This is basically procedure for internal reconstruction. You have that chapter in accounts, internal reconstruction. The legal aspects of this is covered under section 66. Then central government, I will give in RSC2, SEBI in RSC3, ROC RSC2, creditor RSC3, and to all the creditors also within 7 days, I should give the notice for saying that, look, we are going to reduce the share capital of the company. How? I have to file objections within 3 months from the date of receipt of the notice, which tribunal will go. Apart from that, I'll also have to publish in the newspaper, one English and one vernacular, which has been displayed on the website. The company will file the certified, the tribunal will forward the, who forwarded to company within 7 days will, after all the objections are taken into consideration, they will finally send a final order to the company. Representation submitted also should be gone through. There will be definitely principles of natural justice. And finally, order will be passed by the tribunal. And finally, it will be confirmed. It will be confirmed. This is the overall procedure of section 66, reduction in share capital. Next, moving on to section 68, buyback of shares. What are the sources of buyback of shares? Free reserves, security premium account, proceeds of any fresh issue of shares only. These are the only sources of buyback. Anything else is not allowed. It should be authorized. Buyback should be authorized by the AOA of the company, which means if AOA is silent, buyback will not happen. What is the percentage of buyback of shares? The buyback should be, these are all important questions in auditing. It can come in law also, and it can come in MCQ definitely in law. What is the percentage of buyback? Buyback must be what? Less than 10% of the total paid up share capital and free reserves, and up to 25% of the total paid up share capital and free reserves of the company. You can buy back. Maximum should be 25% of paid up capital and free reserves. Paid up capital and free reserves is like the net worth, so maximum 25%. And the buyback should also be less than 10%. If it is less than 10%, only board resolution is enough. But if it is more than 10%, up to 25%, then what is needed, guys? You should take a special resolution. Right? So how to remember? Up to 10% board resolution. More than 10% up to 25%, what is it? Board resolution plus special resolution. Can I go beyond 25%? No. It should never exceed 25%. It can never go beyond 25%. Then there will be a debt equity ratio you should maintain. Secured loans, debt is nothing but, debt equity is nothing but debt divided by, that is secured loans capital, unsecured loans plus capital, plus reserves, etc. Debt by equity. How much? 2:1. 2:1 ratio. should be maintained. Higher amount also can be given with central government approval. All shares should be fully paid up before buyback, fully paid up shares. From where do I buy back? I can buy back shares from the open market, stock exchanges, etc. From the employees also, from the existing shareholders also, I can buy. After buyback, securities are physically destroyed. This is predominantly now gone because all unlisted companies and public companies anyway need to have in demat form. Physical destruction is no longer there, but anyway, it's there theoretically within 7 days from the buyback. Next. Buyback must be completed within 12 months from the date of passing the special resolution. If shares are listed, then SEBI guidelines also need to be followed. I have to maintain a buyback register, and from between one buyback to the other buyback, gap must be minimum 365 days. When I initiate the special resolution, buyback must be completed within 12 months. That is one part of the story. Second one, gap between two buyback must be 365 days. No further issue of shares will happen within 6 months. There will be no further issue of shares within 6 months, except when there is a bonus issue or a right issue. So when I if I do a buyback today, within 6 months, again, I cannot buy back the shares. However, of the same class of shares, if I buy back equity shares today, tomorrow, can I issue bonus shares? Yes. I repeat, 3 things, guys. Gap between two buybacks minimum 365 days. Gap between two buyback minimum 365 days. Second point, if I pass a special resolution today, buyback should happen within 12 months of that special resolution. Third point, if I buy back shares today, say I bought back the shares, can I again issue the shares? Not possible. Within 6 months, I cannot issue the same shares which I have bought back. But think about it, I have bought back shares. Today, I want to issue bonus shares. Can I issue? Yes. Bonus shares I can issue. I have bought back shares. I want to do a right issue. Can I do? Yes. I want to give ESOP. Can I give? Yes. So 3 important things: gap between 2 buybacks, 365 days minimum. One special resolution is passed, 12 months is the time within which you have to finish the buyback. Third one, if I buy back shares today, I cannot issue further shares within 6 months. However, exceptions are bonus and right issue. The offer for buyback shall remain open for a period of not less than 15 days, but not exceeding 30 days. 15 to 30 days is the criteria. All members of the company can agree for even less than 15 days. I can say let's do the buyback within 7 days, but how many people should agree? All members, unanimous resolution. So debentures, of course, for debentures, you should pass a special resolution. And, debentures, again, it should be redeemable, shall not exceed 10 years. For preferences, it is 20, can go up to 30. For this, it is 10 years. They should create a debenture trust deed within 60 days after the allotment of debentures. This is for the protection of everybody. Debenture trust deed must be there. And there will be a charge. Charge means right over an asset. Specific movable property, there will be a right over an asset. And guys, you should create something called as a DRR, Debenture Redemption Reserve account should be created, because every time when you redeem, you'll have to set aside a certain amount for the redemption later. Out of the profits available, you should keep creating this DRR. DRR shall be created only out of the profits of the company available for payment of dividend. How much DRR will you do? At least 25% of the outstanding amount. If 100 crore is the debentures given, 25 crore will be the debenture redemption reserve account that I will create. Can I invest the DRR, the amount in the DRR somewhere? Yes. Invest or deposit a sum which is not less than 15% of the amount of debentures. I have to keep investing at least how much? Shall not be less than 15%. So 15% of the amount I have to keep. I have to invest. Where will I invest? In unencumbered securities of the CG or SG. Basically, risk-free investments I can make. Risk-free investments. That's about it. Then can I nominate also in my share? Can I nominate that if I die, somebody else will take up the share? Yes, nomination will be there. If nomination is there and will is there, what will override what? In a will, my grandfather in the will has given it to my sister. 1 crore worth of shares given to my sister. But in section 72, he has given it to me. Who will it go to? Will prevail or 72 will prevail? The law says 72 will prevail. What if a nominee is a minor? If nominee is a minor, holder of securities may appoint a person who shall become entitled. That is, a guardian has to be appointed. That is this particular chapter. And deposits is very simple, guys. We'll quickly go through. So just fine, 2 minutes, we'll finish it off. So deposit includes any receipt of money by any person, but exceptions are banking company, non-banking company, HFC, whatever they accept, that will be not called as deposit as per Companies Act. And any eligible company also can accept deposits. What are eligible company? Net worth of not less than 100 crore or turnover of not less than 500 crore. These limits you have to remember, because these can be coming in MCQ. MCQ questions can come in deposit. Then what is not also a deposit? Any amount received from any foreign government, international bank is not deposit. Any loan from banking company is not a deposit. Why is it not a deposit? Because deposit rules need not be followed. Some long, very strict rules are there that need not be followed. Loan from public financial institution is not a deposit, and amount received from a present director is not a deposit, and all these are not deposits. Deposit means any person who has made a deposit with the public company under 76, prior consent will be taken. That's about it. Apart from that, what is there? Yes, just like your debenture redemption reserve account, just like CRR, you also should create something called deposit repayment reserve account, where an amount equal to 20% of the amount of deposits maturing in the following year must be kept. In DRR, it is 25%. In this DRR, deposit repayment reserve account, it is 20%. An investment in the debenture redemption reserve was 15%. Here, nothing is given as such. That's about it, guys. Here, let's not delve too much in depth into this. This much is enough, I feel. This much is enough. All right. So we have completed around 5 chapters. So the remaining 6, 7, 8, 9, 10 will be done tomorrow quickly. Again, 6, 7, 8, 9, 10 are very, 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 very important chapters, which will be done. We will be doing it tomorrow. Okay. All this deposit, trustee, deposit, all that you leave. Then charges are very important. The next chapter is charges. After charges, we will go to management and administration, then dividend, auditors, accounts. All this will be dealt with tomorrow. So on that note, thank you so much, guys, for the opportunity to come and discuss things with you. I hope it was of help. Thank you all. See you tomorrow. Bye. Any doubts? I'm seeing the screen. There are no doubts as such. So I think we can stop.
Yes, sir. Sir, I'm
At the end of the session, I'm seeing the questions. I've handled all the questions as and when you guys were doing it only. So I think it's good to go. Yeah.
Yes.
Rahul, I think it's fine.
Yeah. Sir, it was really a wonderful session, sir. Thank you for accepting our request in a short notice, for sharing a valuable time with us.
Thank you so much. Thank you.
Your charts were too attractive, and it was very easy to get into the concepts quickly.
Thank you so much. Thank you.
And since exams are near, and yes, of course, we are students, and we know how it is difficult to deal with those exams. Your charts and your revision parts are making it a little bit easier for us to quickly have the revision, because in one day it's really would be difficult to get on. But these charts and these notes would really help us to grab the concepts faster, so that we can revise quickly and get into the zone, the exam zone, sir.
Thank you so much, sir.
We really thank you, sir.
Thank you. It's my pleasure.
SICASA is conducting a lot of other events, and we request the students to take all the advantage of all those events. And yes, the tomorrow session would be starting tomorrow at the same time. So would be teaching the next few chapters, as sir mentioned earlier. So once again, sir, we thank you for your time, and we thank all the students for attending the sessions.
Thank you so
Thanks a
much.
lot.
Thanks a lot. Thank you. Thank you so much. Bye. See you tomorrow.
Thanks,
Bye.
sir. Hey, Hemant. Hi, Hemant, bro. Hi. Hi. What happened? You cannot talk.
One second. You can give
End la.
end.
Leave irukku. End enga irukku?
I think it's showing for me. Yes, it's showing for me.
Okay.
You can leave.
Yeah. Yeah, sure. Thank you.